Okay, the first one, 1673, allows certain liquor manufacturers to sell to on-premise licensees. My understanding is that we have found a way so that this bill is no longer necessary, that you've taken care of this.
Yes, exactly. We're going to utilize the direct-to-consumer permit for that, which will authorize the liquor manufacturer to sell direct to on premises.
So in this case, even though the on-premise is in the same building or literally,
Right.
but it
It's
does
even-
have its own standalone license as an on-premise licensee, so simply using
Correct.
that structure.
It's an add-on license to the liquor manufacturing license.
Perfect. Okay, so subcommittee voting form.
Are we saying that we don't need this bill?
Correct.
Okay.
That's the good.
Just for the record, Chairman, I did speak to the sponsor of the bill and the involved parties on this, and
Yeah.
they're all set with that as well.
They're all happy. Good. You
Certainly.
do, okay?
Well, just to understand it, so is that like a rule, or how does that happen?
So this is a law that's
does it
already
come-
on the books.
Yeah, yeah.
And basically that, if you were to say, if we, in hindsight, they should have, they should have realized that this was capable of doing it. But I would, in the defense to the Liquor Commission, is that we always had the whole theory behind the 3-tier was that you couldn't be an owner of different tiered licenses. Okay, so that's the old days. But over the years, we've been trampling on that left and right. And starts out with the brew pub was the ultimate trampling on that one. It was basically throwing the baby out with the bathwater in that case. But in this case, what we're saying is because the restaurant has its own on-premise license as a restaurant, that the distiller, right? He's a distiller.
Liquor manufacturer.
It's a
correct.
liquor manufacturer. He is allowed to self-distribute this to that licensee.
That's an existing law, Representative, that was passed in 2021. It's the direct-to-consumer. 17827 B, I believe it is. 17827B.
He
You're
deals with RSAs every day, so he should be good. Except 175, call it 6, which was slightly obscure, but that's the one I'm going to remember for a long, long time.
It's an important one, yes.
Okay, all right. So Representative Patusek, and who else is on this subcommittee? Okay, Representative Walls, okay.
Subcommittees.
Walls,
Liquor, oh,
okay, second by Representative Walls.
second
Moves ITL. Okay, so who's here? We have
Here.
Walls, Sullivan.
everybody's here.
How do you mean every? Okay, Anita, and well, Sullivan's not here, but he's on it, and Spears on it. Okay.
You want a second?
Yeah. No. Well, Representative Walsh is the second. Okay. Any discussion on any expedient to legislate? Seeing none, all those in favor say aye.
All right.
1, 2, 3, 4. Yeah. 5, 6. Okay. Yeah. 6. Okay. Next up, allowing certain liquor manufacturers to sell to on-premise licensees, 1673.
1481.
Yeah, 1481.
What am I? Oh, what am I looking at? Oh, I'm looking on the wrong page.
We just did 1673.
Oh, I see. The numbers got scrambled. Okay. Okay. All right. On-premise licensee to sell drinks made with distilled alcohol for takeout. So we already have a bill that's already in. So is it worth keeping this around, or should we just ITL it?
One can be ITL'd.
Okay.
It's identical language to HB 529.
Okay. Okay,
I'm gonna take that one.
yes. Any questions on things? Representative Petuzek, seconded by Representative Walsh from inexpedient to legislate. Any discussion on the motion? Seeing none, all those in favor say aye. 1, 2, 3, 4, 5, 6. Okay. Okay. Last but not least, 1679, establishing a beverage container redemption program, otherwise known as a bottle bill. Okay. Who would like to make the motion on this one? All right, Representative Spear, seconded by Representative Petrusek, moves inexpedient to legislate. Any discussion on the motion? All right, seeing none, all those in favor of ITL, please raise your hand. 1, 2, 3, 4, 5, 6. Okay. What's that? 6-0. Okay. We're all set? Thank you. All right, so next up will be 1444.
Give me a second to get back.
Okay. Now, did everybody, I sent out the amendments. I don't know if anybody got them. If not, I will certainly pass them around. Six. Wait a minute.
Yes.
What am I looking? I'm looking at the wrong thing here.
381.
This is the wrong one. Oh. It's supposed to be 11. 1444. What?
381.
Sorry about that. I get the wrong. Oh, you got it. Oh, I guess I don't know if how many copies I just sent out of that. 14. Okay. Okay, that one's here, right? So let me put that back here. Okay, how many 1444s do I have?
I got 381, that's the last one I
Okay.
got.
Did you get the
New
1444?
one.
I have the unapproved. I
But-
think that's my old one.
This is January 28th. No, you got. Let me see.
Three gone.
We sent two around together. We
Yeah.
Yeah, 381 is the only one I got.
We should have had an approved one.
Yeah. Yeah, two are me and one is Spear. Just relax.
So I think she got, the copy got 250. So let's see here. You also have 65. So, this is 65. And this is
197,
1197.
1197. Yep, they all are.
I've gotten so I just parked on the last row out. Just do it. I always get right where the path is.
See, that's why you get your little,
Mornings are not my
I know.
strong suit.
But you don't know. Something stupid. Shoes today.
Brain's not functioning.
Okay,
Supposed to be here,
Well-
it's here finally.
we take up the amendment to 1197. So the good news is we've pretty much previewed all the different issues.
That's right.
So I guess the big thing was just give us the highlighted words that we need to note that how it resolved the issue.
Sure. Thank you, Mr. Chairman, members of the committee, DJ Betancourt, Commissioner of the New Hampshire Insurance Department, joined here by Josh Hilliard, our enforcement counsel. So as the chairman mentioned, I'm going to try to be extremely brief here and then just see what questions you might have. So just to check the boxes, the first section here where you see there is some amended language, that is the 5,000 language that we talked about upping the fine. That came in lieu of the continuous day violation provision that was originally there. Are there any questions on that particular section? Seems like we're good there. Next section, kind of a continuation of the previous one. And so now we get to the issue we discussed with regard to the department's ability to issue licenses to individuals who have some troubling issues in their background. Originally, as you recall, we had misdemeanors listed specifically. There's, I guess, a bit of an irony that in being so specific, it included too wide of a range of conduct, so we added more specificity to that. And so you'll see there that it now reads, having been convicted of a felony or other offense of moral turpitude involving dishonesty, deceit, theft, willful misrepresentation, or which tends to discredit the profession. Any
In the
questions?
view of the commissioner.
Right, but there's a whole bunch of due process
Right,
that
'cause
is
you're the
included in
judge.
that. I am, at the end of the day, the buck stops with me, yes.
Yeah.
Or who's ever in my role. I will not be here forever. None of us will be. All right. What's that?
Until I have my portrait,
Well,
until I have my portrait made up in the middle of the. Exactly.
we're off to a good start. All right. And then the last two items on page 4, that includes the standalone group dental and standalone group vision coverage item that Michelle Heaton did a very good job of explaining the last time that we were here. And then the final section deals with the homestead rights exemption that needed to be cleaned up a little bit because subsequent language passed at the same time. Excuse me, language on that issue passed at the same time as our comprehensive CCRC oversight reform. So we're here to incorporate those changes into that new robust oversight authority. So that truly is, in the interest of time, what I have for you. And again, I'm happy to take questions.
Anybody have any questions? We're good.
All right. Excellent. Thank you all.
Moral turpitude.
Okay. The insurance subcommittee. I got Priscelli, Burrows. We'll scratch out Gibbs and replace that with Butler,
Teresa, Hunt, and Smith.
Miles, Cole, Teresa, Hunt, and Spear.
Paxton. Because Cole's gone.
Right.
Paxton's on.
Right, Jackson. Okay. Who would like to make the motion? Okay, Representative Miles. Seconded by Representative Burrows. Any discussion on the motion on the ought to pass on the amendment?
519.
519H. Okay, if you're on the subcommittee and you're in favor, raise your hand. 1, 2, 3, 4, 5, 6, 7. What? No,
Seven.
7. Okay. Yeah. it's amendment number 519. H. Unanimous. One, two, three, 4, 5, 6, 7.
Yeah, Butler's not here.
Butler's not here. Okay. Motion now is ought to pass as amended. Moved by Representative Miles, seconded by Representative Burrows. Any discussion on the motion? Seeing none, all those in favor, raise your hand. 1, 2, 3, 4, 5, 6, 7. Unanimous. And we're done.
We have, we're off until 11.
Okay. So I guess I screwed that up, didn't I? Tell me, I don't remember pushing it so far
We
out.
got 11 o'clock now. And that is a hearing. Okay. All right. Yeah. Get that back up here. Go to well,
So generally,
we're on
are
break for
we
15 minutes, right, John?
ticking people off who are voting up here or just our regular?
I would, yeah, just circle the people who, you don't have to worry about putting everybody. I would put just the committee members,
Okay.
just the, so. No, Okay, close enough. We'll open up the public hearing on House Bill 1744 and hear from the prime sponsor, Representative Hartnett. Good morning, Representative Hartnett.
Thank you, Mr. Chair. Members of the committee, my name is Tim Hartnett, representing Hillsborough 41, Inner City Manchester, Wards 2, 4, 5, and 7. Appreciate the chance to talk to you about this important bill. I think we've all watched in the news the overcrowding of hospital emergency rooms. We all are aware of the challenges that fentanyl and other drugs of abuse have our communities have faced. And this bill aims to give us a snapshot of how our health insurance, both Medicaid and commercial insurances, are managing the benefit. It's not a complicated bill. It's going to require carriers to submit data on utilization management, prior authorization, medical necessity criteria, claims denial rates in comparison to other medical conditions, network adequacy, and wait times for in-network treatment. When these elements are done well, people get all the care that's necessary and nothing more. When they're done poorly, people don't get care, they're impeded from treatment, or they get poor care. I assume that all carriers are interested in these areas and are probably already collecting data on these elements. Just if I were running a behavioral health insurance company, this is the kind of content that I would be wanting to know about, to know that I was delivering a good product. I believe the Insurance Commission will be interested in this data because it will protect consumers and, again, demonstrate value and integrity to the products that they're meant to regulate. All items in this list, the Department of Health and Human Services would benefit from knowing. It would help them with planning and other challenges. Certainly, we would want to know as a legislature, and certainly the people of New Hampshire have a right to know as well. Some of this data actually may already be being captured by the Insurance Commission with their managed care complaint and appeal reporting process. But those are only complaints and appeals, not the sort of broader implementation of these programs. I would tell you, too, in my retirement for the past several years, for a day a week, I've worked for the local mental health center here in Concord doing emergency work a day a week in the Concord Hospital and in the community. And I would tell you, good luck trying to find a child psychiatrist anywhere in New Hampshire. If you have a child who's challenged, you're not going to find one. If you have an elderly parent who has cognitive challenges, good luck finding a geriatric psychiatrist. Good luck finding a therapist, a social worker. And yet on our websites, we say that outpatient therapy will be available within 25 miles or 45-minute drive from where you live. Inpatient treatment will be available 45 miles or 60 minutes from where you live. And I think we all watched with discouragement as the Farnham Center closed its doors in Manchester, one of the larger rehab programs for people with alcohol and drug problems. I doubt, by the way, that although we have distance criteria, we don't have time frames. So you may find an outpatient therapist who's within a certain number of miles from your home or drive time, but you may have to wait a month or 2 months. That's not good if you're facing a child management problem, a conduct disordered child, a parent with earlier onset dementia, and you're struggling to sort out how best to help. The bill would authorize the Insurance Commission to write the necessary rules, and the report would give us a snapshot. And I would want you to know, as somebody who 25 years ago ran the state of New Hampshire's Division of Alcohol and Drug Abuse, where at that time we had assumed none of our regulatory authority to regulate providers. Behavioral health, in many ways, compared to other forms of health care, is substantially unregulated already in New Hampshire. In other words, we're trying to play catch up and make sure that we're providing good care that insurance carriers are managing benefits for recipients well. So I hope you'll support this bill. You have in front of you, too, some written testimony from the New Hampshire Community Behavioral Health Association. If you look on the back, they've made some really, I think, good possible additions to consider. I'll wait till it comes around. The initial bill was really meant to be a starting point for a platform that would help inform us. I think they've made some good recommendations. They're worth considering. Expanded reporting requirements include benefit coverage, decisions, and service exclusions. That's important. Require transparency around differential payment and benefit coverage by provider credential. Again, creating a level playing field. Clarify and standardize the definition of wait time. We all, I think, know what that's like when we're trying to get into primary care, urgent care, other healthcare settings. So I'll stop there and try and help with any questions.
Representative Burrows.
Thank you for taking my question. This may not be directly related to the content in the bill, but if there's a child who's a danger to themselves or to their family or anybody else, where do they go in these scenarios if, with a month or two waiting time?
Yeah, I can tell you, I see, I did this same work 40 years ago. I cut my teeth in the CMC and Elliott emergency rooms. And in retirement, I threw my name in there to do it one day a week. And we see more younger children week in, week out than I would have ever imagined 40 years ago. So they show up in emergency rooms. Sometimes, sometimes not. Yeah. And if you have some doubts about this, really just, you can Google Psychology Today and there's a function there, Therapist Finder. Try and find a doctor. Try and find a therapist within, X amount of miles from your home. You'll see names. You'll have phone numbers. See if they have any openings. It's awful. And we're not tracking it in a way that will inform us. And I think this is a pretty low demand way of getting some good, useful data. I know, having run the Division of Alcohol and Drug Abuse, I would love to know this information.
Okay, any other questions from, Representative Herbert? You just turned it off. Yeah, now you're on.
If this goes through, I don't have a background that you have, but what exactly would happen if this were to be funded accurately? What would happen? I mean, what would be the result?
You'd get a report. You'd get some useful information. The Department of Health and Human Services would get some useful information, and then it would be up to us and the departments to do something useful with it. But you don't have this, best I can tell.
Okay. Do we have the personnel in our system to, if you did all the information you needed, would we have the people available? I mean, it sounded to me like you wouldn't.
I'm not sure, but I can tell you, this is a really small lift. The burden is really on the insurance carriers to provide the information to the department. So it's really organizing it and putting it into a report. You already have people who are generating similar types of content for you.
So we're right
Further
now.
question?
Further, thank you. So right now, we're basically relying on private businesses, corporations, and that sort of thing.
At least as it relates to this, I think you're flying blind. You don't have the information.
Okay, thank you very much. Chair will call on Michelle Heaton from the New Hampshire Insurance Department and tell us how much you're doing already.
Good morning, everyone. My name is Michelle Heaton. I'm Director of Life and Health with New Hampshire Insurance Department. The insurance department completely understands the concerns relating to a lot of these issues, and that's why we're trying to do a lot to monitor a lot of these issues. So I think in this bill, some of the things that are highlighted are utilization management practices, including prior authorization, claim denial rates, specifically for mental health and substance use disorders compared to med-surg, wait time standards for mental health providers, and network adequacy for mental health providers, as well as compliance with mental health parity. These are all areas that we're already actively doing work in. I know I've testified already before you, but I'll again highlight for the record some of the things that we're doing. With respect to utilization review, SB 561 from a couple years ago just became effective January 1, 2025. We are still in the process of implementing that, and that first data reporting requirement is going to be due April 1st. At that point, as required by that bill, we will be posting carrier-specific information regarding prior authorization. We're also planning on doing a little bit of a broader one. It's not going to be carrier-specific, but it's going to include some metrics with respect to prior authorization for mental health and substance use disorder prior authorization metrics as well. We are also in the process of entering rulemaking with new rules, the INS 2001-2002 series. Those both relate to utilization review. We're updating all of our rules in light of the new legislation and putting more parameters more parameters really around prior authorization in utilization review, denials, and appeals processes for those. We're also in the process of, it's already in rulemaking, we've created a new part 1003, which is with respect to claims processing. That is new and it's specific just for major medical. We had claim processing rules previously, but they were broader, and this new part is specific just to major medical coverage and is going to, we hope, help streamline some of those issues that have come up with respect to claims processing. Also, with respect to claims processing, we do have our all-payer claims database, the CHIS. We do a lot of work using that database to monitor a number of different issues. And we use it for our market conduct and market analysis endeavors. We also have our annual hearing every year at the end of October that goes over a lot of the cost drivers, not really specific to this, but that data also helps inform that work as well. With respect to network adequacy, we have been doing a lot in this area. We are already leading the country in having some of the more stringent requirements around network adequacy that we apply to our entire market and not just QHP. We are in the process of entering rulemaking with new rules to further advance our work with respect to network adequacy. And we are monitoring network adequacy at the time of form filing as well. So when the forms get submitted annually for the next plan year, we do a review of the network and compare it to our claims data to ensure that all of the plans have networks that are adequate enough to meet the needs of the people in the counties that they're trying to sell in. So we verify that before the plan is even available to sell. We also do some other enforcement and monitoring with respect to network adequacy that is done throughout the year as well. So in the next year, we're hoping to have some more transparency efforts with respect to network adequacy, hopefully later this year in the fall. And I think that will really help cut down. I think with all of these issues, there's a lot we're doing, and we're working on trying to make some of those efforts more transparent so people have a better understanding, the public has a better understanding of what we are doing to monitor these products. And with respect to ensuring compliance with the federal mental health parity laws, and what I think this bill is trying to get out, we do already have rulemaking authority to promulgate rules on managed care and specifically mental health parity. We do have some rules in place. It is our plan in the next couple of years to revamp those rules as well. But as you can see, we got a lot in rulemaking right now, and so we just need some time to catch up on some of those things. But we do We are actively engaged in comparative analysis reviews. We do those annually for different NQTL, which are non-quantitative treatment limits. We have also implemented a new QTL tool, which is quantitative treatment limits. It's a tool that we use during form filing to verify that the plans as written and designed meet the requirements of mental health parity. And so that's something we developed recently, and this year we're expanding to the entire market. So we are doing a lot in this area. We do recognize that we could probably do more to put some more transparency around these different initiatives so the consumers and stakeholders just have a better understanding of what the department does and how we regulate these issues. With respect to this bill, we think we already have all the necessary tools to do this work. We are undertaking a lot of this work already. What this bill, it seems, is aiming to do is to require another some kind of data or report to us. We think it's a little bit duplicative, as we already have a lot of reporting requirements with respect to claims, utilization review, and network adequacy. So this would just be another report to have, and I'm not sure that we would get anything new from this report that we're not already getting through some of the other reports that they're required to have. Additionally, there is reference to Medicaid, and there's a whole section for Medicaid. We do not regulate Medicaid. The standards we have and what's in place for our insurance plans is different than what laws and requirements are for Medicaid. So we don't regulate Medicaid, and we wouldn't have anything to do with that. So I think that's just a little bit of a technical defect. Anything with respect to Medicaid would have to be done by Medicaid and DHHS. So I think that covers the highlights, but I'm happy to answer any questions.
Representative Burrows.
Thanks for taking my question. Just curious, no matter how we gather this data, will it actually lead to helping us ease the crisis of not having enough providers throughout the state?
Transparency always helps in helping identify the issues. And so that's where we're hoping to use some of this transparency to identify where there are shortages. But there's nothing we can do at the department to make providers appear out of nowhere. But at least if we know where there are weaknesses and shortfalls, that could help stakeholders and even the carriers maybe try to recruit people to those areas. And if we know the areas we need to focus on, that's how we're hoping to, help out with these problems. But yeah, a lot of those capacity issues are well outside the jurisdiction of the insurance department.
So as I read this bill, it seems to me that because I looked at that list and I said, well, they have to do all this to determine whether the premium is appropriate. Anyway, but that it was the fact that it's printing a report and summarizing it, not being in particular, but it's generalizing it, and you're supposed to generalize all this and making a report. So how many reports now do you make to us legislators? I'm trying to think as a chairman how many reports I.
We've been trying to get away from these reports because historically, there's a lot of confidential information we get that we can't redisclose.
Right.
So once we're boiling it down into these reports, they're kind of skint and I don't think very helpful.
You lose.
We're
lose it.
trying to, in the reports we receive, we're trying to make them more data driven. So they're things that it's things that we are more easily able to verify. If the carrier is required to just provide some narrative, then it's not necessarily helpful. We don't necessarily have the data or the specifics we need to verify compliance with things. So that's why as a department, I think we would prefer more transparency efforts just so that they're out there and they could have more meaning to them. I think sometimes when we have to just provide these generalized summaries, they're not very helpful. So I think network adequacy was one that used to be in place. It was recently repealed, and it was just kind of a report saying, yep, everyone met the network adequacy requirements. And that didn't, I don't know that was really helpful to anyone. So we're trying
test.
Yeah, so that's why we're trying to do more transparency efforts around network adequacy so stakeholders and consumers better understand what network adequacy is, how it's being met, and more of the network robustness and realistic travel times for what you can expect depending on where you live and having that link to claims data. So
Well, we discussed the ghost networks and the problem.
Yeah.
We've already Okay, the only other question I have is on the fiscal note. It says, assumes there'll be an increase in administrative costs by the health carriers, which in case that they will impact the premium smooths. In other words, there's a line item when they set their premium that said, this is our having to fill out your stinking bureaucratic forms that they can, and when that just by passing this, it just gives them a new opportunity to pass on more administrative costs into the premium.
A little more nuanced with that, and I think we phrased it, I think, slightly differently in the fiscal note we submitted. But when we're talking about any kind of report or data that the carriers have to provide to us is
Yeah.
another regulatory requirement that they're going to have to comply with. And there's always a cost associated with everything. Nothing's free. And the way that works, if we go back to the MLR,
Yes.
if you
okay.
have an 85%
right.
MLR, 85% of the premium collected needs to go to paying claims. That's leaving you with 15%. That's for all of your overhead, administrative fees to run the plan, payroll, all of that stuff, plus taxes at state and federal level, fees, all of those assessments, all of that stuff. And then whatever's left over is their profit. And so, usually most carriers are running, maybe between a 0 and 5% profit margin. But so to the extent they can bring down their administrative costs, that would give them, more wiggle room for a profit. But if we keep adding more and more to those administrative costs, it eats into their ability to have a profit margin. And that's assuming, all your projections for claims are on target and all of that stuff. If they don't spend that 85 in claims, then they have to refund money to the consumers. It's not like they get to keep it to cover some of those administrative costs. So I think it's a little bit more nuanced than that. It's not that they can just raise premiums to make up for it.
Wasn't thinking about the MLR is the governor there.
Yeah, and I think
ensure.
the
So,
more
Why don't
administrative
you explain what exactly the MLR, because you've got a little bit more in there, but we have some new members on the committee, because the MLR is really very, very important. So I think you should let people know
So
what that means.
the MLR is the medical loss ratio, and in the major medical markets, it's set as percentages. So it's a little bit different for individual versus group and large
Right.
group. But what it essentially does is sets these percentages. So all of the premium collected for that product, say if the product has an 80% MLR requirement, that is a federal law requirement saying that 85% of the money you collect from premiums needs to go to health care for your covered people. So that's paying claims and different types of programs that fall into that category. That leaves 15%. And that's what you have to work with to pay all your administrative fees, overheads, taxes, assessments, all of that stuff. Once you've paid that, whatever's left over is your profit. If you have too much administrative expenses or you end up not meeting your MLR and have to pay out more in claims, you don't get to collect more premium. You just get lower amounts of profits, and that could mean you don't get any profits and you're actually spending more money and then you've collected. But on the other side, if you only end up paying, say, 80% and you have an 85% MLR requirement, then that means that 5% you don't get to keep as potential profit or surplus. You have to refund that amount back to consumers. And so it's not done on necessarily a year to year. It's a 3-year
3-year
average.
rolling,
And
yep.
there's very complex formulas for this. I'm just like watering it down to the very basics to make it more understandable. But there's a lot of different accounting things that go to what part of that equation it gets accounted for. But that's the dumbed down version of it, the basics. So
That's the elevator speech of it.
yeah. So anytime that you're adding things to administrative costs, that's potentially eating into profits. And I guess like the whole thing you want to be aware of is if it becomes too costly to operate in a market, then and you can't make a profit, then what are you doing in that market? And so that's always part of the balance of everything. That doesn't mean you don't want any oversight. You want to make sure consumers are protected, but you just have to be mindful that with every one of these requests, that's an added cost.
Representative Ammon has a question.
Thank you, Mr. Chair. Just a question to you. This handout that we received this morning, it has additional items listed on it. You may not have a copy of it.
No, I don't.
this is from the New Hampshire Community Behavioral Health Association. Maybe you could get with the sponsor and see if you have already covered some of these items, or you can cover them better.
Yeah.
So we can have more transparency if possible.
Yeah, another thing I should highlight too is we also have a behavioral health advisory committee.
Well, I was going to also talk
that
about that.
meets quarterly, where we're trying to engage more with stakeholders with respect to mental health and substance use disorder. So we are always looking for these types of topics to work through. Sometimes it's education, sometimes it's trying to figure out how can we make this work better for everyone. And if there's rules or or something that we need to look into, it's a great way for us to figure out what's going on. So we would be happy to look at that letter.
I was going to invite her because I'm actually a member of this committee and I don't make my meetings very well. So if anybody on this committee would like to get more involved in mental health issues, I would let you take my seat.
We put you on it for a reason.
Okay. Yeah, Reverend Treason.
So a quick question, does the employee payroll that falls in the MLR or it falls in 15%?
Sorry?
The employee payroll for the insurance companies, does it fall in the MLR portion or falls
No,
in 15%?
that would be the administrative cost. So that would be
15%?
that other 15%
Right.
that's
So
not
the,
paid.
the old question is the president, the executive of that health insurance company is part of the 15.
All the
That
employees, I meant.
85,
Yeah.
85 and 90 is that has to be a payout to an actual provider. So it has to be a mental health provider, has to be a hospital, has to be a doctor, has to be actual payouts. It's done on a 3-year average. But there's no everybody talks about the insurance companies make all this money. They're limited to how much they're allowed to make.
Clarify that.
Unless they want to make more payouts. But that increases the premium and therefore they lose customers. Thank you very much.
No problem.
Okay, so I have several cards here in support of it, and so I will, each one is about 2 or 3 minutes. So Sam Hawkins from NAMI, New Hampshire, in support of the bill. And
Good morning.
morning.
Thank you for the opportunity to testify today. For the record, my name is Sam Hawkins. I'm here today representing NAMI New Hampshire, the National Alliance on Mental Illness, in support of House Bill 1744. And I will be brief because already this session there have been several bills that we have discussed, like 1744, that aim to address our pervasive challenges with mental health access. And I've shared with this committee that in the course of our work, as we are an organization comprised of individuals and family members with lived experience, serving people with lived experience, we hear constantly about people who struggle to find and afford the care they need. And in these discussions and in these hearings, we regularly hear that our current policies and practices are not the problem and that we have everything we need. And to that, I would ask, if that's the case, why can our community members still not get the help they need? And I ask that as a genuine question. If we have all of the data we need and all of our policies and practices are where they should be, what's the flaw in the system where people can't get the help they need? And what can we do, we as in all of us, the state, the providers, the health plans, stakeholders and the community members, do to fix it now and also to address those upstream challenges, because they are not completely separate issues. I think a tool like House Bill 1744 is really essential to understanding where these problems lie so that we can take an informed approach to addressing them. This bill does take a very holistic view in that it looks not only at commercially insured state-regulated plans, but also the state Medicaid program. While it is true that the insurance department does not regulate the state Medicaid program, I think it's still helpful for us to gather that data so that we compare it against the state-regulated commercial plans and understand if there are disparities in access and affordability across those programs. So while all of these problems and the solutions probably don't lie in one place, we do need to start formally understanding and addressing them. I ask the committee to please support this bill. Thank you.
Thank you very much. Any questions? Seeing none? One more call, Sam Burgess from New Futures.
Morning.
Morning.
Thank you for the opportunity to speak today. My name is Sam Burgess. I am the Healthcare Policy Director at New Futures. We are a nonpartisan, nonprofit organization that seeks to solve New Hampshire's problems through policy solutions. Like the speaker before me, I'm going to narrowly focus my conversation here today on the need, and specifically the fact that it is difficult to find affordable mental health and addiction care in New Hampshire, even if you have insurance. The data shows that many Granite Staters are having to go out of network for mental health and SUD care. Obtaining care from out of network provider puts a substantial financial strain on patients who are unable to pay higher rates to receive care, but that's exactly what many patients in New Hampshire are forced to do. We heard the department earlier speak to the fact that New Hampshire is ahead of the curve on network adequacy standards as it relates to mental health care and SUD treatment. I'm going to go through briefly here a 2024 RTI study of commercial claims data. It's in the packet I passed out, but I'm going to run through a few of the numbers just to speak to the need. So according to this aggregated study of commercial claims, patients go out of network 3.5 times more often for behavioral health clinicians than for medical or surgical clinicians, including primary care. Patients go out of network 8.9 times more often for SUD facilities than for medical or surgical facilities, including primary care. For outpatient behavioral health facilities, New Hampshire has the 5th highest out-of-network utilization rate in the country. And in New Hampshire, for every one person who has to go out of network to see a specialist or surgical provider, 10 must go out of network to see a psychiatrist. That places us 17th worst across the country. I also want to briefly speak on what I think we're going to hear from some insurers in following testimony, and that's the role that providers play in the out-of-network utilization or network adequacy issues in New Hampshire. Providers often get blamed rhetorically for these issues, but the data and the lived experiences of New Hampshire clinicians tell a very different story. Providers don't control network size, they don't control reimbursement rates, director accuracy, or the administrative hurdles that often make participation in these plans unsustainable. When insurer networks are too narrow, directories are full of ghost listings and long appointment wait times that can stretch on for months. These problems stem from insurer contracting decisions, not from clinicians who are already working at capacity amid real workforce shortages. Research consistently shows that while these shortages exist, they are not the sole explanation for lack of access. Granite Staters often can get the treatment they need, as the RTI data shows, but they are just forced to do so out of network because the in-network options are insufficient, inaccessible, or non-existent. I urge this committee to support HB 1744 because the bill addresses the gap between what insurers promise and what patients experience. By improving transparency and allowing the state to verify whether in-network care is truly available, the bill ensures that families are not left paying out-of-network costs for care that should be covered by their insurance. So the last thing I'm going to say is, in the first instance, New Futures urges this committee to support this bill. It's important. It's an important bill that addresses network adequacy gaps in New Hampshire. But barring that, I'd ask this committee, we heard from the department earlier that they are imminently going to produce rulemaking that's going to address network adequacy standards in New Hampshire. That's coming out, as I've heard before, in a matter of weeks, very, very soon. So in the alternative, I ask this committee to hold on to this bill. Wait to see what the department produces, see if it passes muster to the committee's satisfaction. See what they have to say and go from there. Thank you. If I have questions, I'd be happy to answer them.
Any questions? Representative Herbert.
If you can't get the money, how do you get it?
I don't know if I
It
understand the
doesn't
question.
sound to me, it doesn't sound to me as though there is enough money to pay the bills for these people. I mean, out of network, I don't understand the system, but I do understand that if it's being paid well, it will be there. And I'm trying to understand why it's not there.
I'm not entirely sure I understand the
Just,
question.
how about, would you believe?
Would you believe?
And you can say yes.
Yes, we'll go with that.
There we go.
We will
Very
close the
complex,
public
let it go.
hearing.
Thank you.
Thank you very much. Okay, Carrie, you're on. Don't forget to fill out a pink card. You can do it afterwards.
No, no, I don't understand why I don't show up.
Oh, look at all these strangers. I'm going to read this because I don't want to get off track and end up taking a whole lot of time. So excuse me for that part. But anyway, so I'm Carrie Spear, National Ward 3 rep, and this is the testimony for HB 1056. HB 1056 would set up a commission to study the impact of climate change on the cost of reinsurance and therefore on the cost of primary property and casualty insurance we purchase. Nothing to do with health insurance. The commission could develop recommendations for legislation if that would provide primary insurance holders with more visibility into the cost of reinsurance, or it could just issue a well-researched report to be made available to the legislature and the residents of New Hampshire. All right. So reinsurance is essentially insurance for insurance companies. Insurance companies purchase reinsurance. It exists to protect primary insurers from very large or unexpected losses, events like hurricanes, wildfires, cyber attacks, pandemics, terrorism, or massive lawsuits. Without reinsurance, many insurance companies could not survive a single catastrophic event. In 2025 alone, primary insurers paid roughly $725 billion worldwide for reinsurance coverage. So it's not a small market. It is important to note that not all primary insurance providers actually even purchase reinsurance here in New Hampshire. To understand viewpoints on how climate change impacts the cost of insurance, I met with the New Hampshire Insurance Department, Guy Carpenter, a major reinsurance broker, and the Conservation Law Foundation. I also reviewed industry research written by reinsurance companies. Before 1980, reinsurers priced catastrophic risk using long-term historical averages. In the late 1970s, Swiss Re, one of the largest reinsurance companies, saw that weather-related losses were rising far beyond what past data predicted. A review of historical records showed that severe events were becoming more frequent, intense, and costly. Swiss Re, joined by Munich Re, Re standing for reinsurance, created the Swiss Re Institute to model and risk-based. I'm going to have to get a glass of water. Just bear with me.
Harry, you want me to get one?
Swiss Re, joined by Munich Re, created the Swiss Re Institute to model risk based on emerging climate trends. Their research demonstrated a clear link between rising global temperatures and catastrophic losses. By framing climate change in financial terms, they convinced more businesses of its reality than scientists in any other sector. Today, reinsurers are focused on three major areas of risk. The number one risk is climate change, which is driving more frequent and severe storms, floods, wildfires, and hurricanes. Climate-related insured losses exceeded $100 billion globally in each of the last 6 years, with 83% of those losses occurring in the U.S. markets. So we're the big loss driver in the world of reinsurance. Cyber risk is the second one that they're looking at, including AI-driven fraud, large-scale cyber attacks that can affect many companies at once, especially through shared supply chains, and finally, rising litigation costs, sometimes called social inflation, where jury awards and legal expenses are growing rapidly, particularly in liability cases and fueled by the expansion of third-party litigation funding, something we discussed last year. In 2026, reinsurers are shifting from defensive pricing to using nearly $1 trillion in global capital to tighten contract terms, pushing primary insurers to retain smaller frequent losses while reinsurers focus on more extreme volatility. They are moving to real-time data ingestion and generative AI, requiring transparent property-level data, satellite imagery, and IoT sensor feeds. That's real-time sensor feeds on various weather aspects. After major 2025 wildfires that cost about $40 billion, and storms, which cost about $31 billion in losses, reinsurers are adopting Swiss Re-style forward-looking climate data in their 2026 underwriting. Rising high settlement costs are also driving more cautious U.S. casualty underwriting through tighter limits, proactive claims monitoring, and the use of capital market instruments to offload risk. According to the National Oceanic and Atmospheric Administration, New Hampshire now sustains about $800 million a year annual in climate-related losses, a steady rise since 1980. Beyond property damage and well failures, like their home water well failures, agriculture, forestry, and tourism have also been hit. Drought intensified by global warming is driving regional wildfires, and state climatologist Dr. Mary Stamponi forecasts hotter, drier summers and wetter springs and winters. Wildfires have already affected nearby regions to the north and south of us, with 77% of homes in New Hampshire located near forested drought zones, and drought conditions expected to worsen and spread. The state faces an increasing wildfire threat. Unlike primary insurance providers who tailor premiums based on various conditions in localized areas, the large reinsurers typically establish rates across global or broad regions. The effect is that reinsurance premiums in New Hampshire and everywhere else reflect the losses from storms and fires occurring elsewhere in the country and even the world. Reinsurance companies typically spread losses across their whole customer base so as to not hit any one area too hard. According to the New Hampshire Insurance Department, reinsurance rates here went up from about 12% to 19% of primary insurance premium revenue from 2022 to 2024 and stayed at that level in 2025. What I'm saying there is that when we pay a premium to them, to the insurance company that we have, they take 19% of that premium and go buy reinsurance. And that's how we get involved in the reinsurance part of it. And that is going up. New Hampshire property insurance premiums are expected to continue rising in 2026, consistent with a national trend of increased costs through potentially at a slower rate than the dramatic hike seen between 22 and 24. While some national forecasts suggest moderate increases, insurers continue to raise rates due to higher construction costs for repairs, increased reinsurance prices, and elevated risks from severe weather events. We will have to see what happens in 2026 as reinsurance companies seek to recover from the fires and storms of 2025. I look forward to working with our Commerce Committee to revise HB 1056 if needed to better serve the legislature and the people of New Hampshire. Thank you. Any questions?
Yes, Representative Thaxton.
So, if we if we pass this, what are we getting that we don't already have? We have, the insurance companies clearly have a good understanding of their situation. The reinsurance companies have a good understanding of it. You've given us more statistics than Doan's has liver pills, so what's the mission? What's going to be better for passing this? Because I don't disagree with anything you say. I understand how reinsurance worked. The Hartford, when I worked for them 45 years ago, was very proud of the fact that they'd covered everything from floods to the great earthquake in San Francisco in 1906, all through reinsurance. So they all back each other up. That's the bottom line. What does this do for me as a consumer, as an insurance company?
Actually, I think most of the people that I've talked to that are purchasers of primary insurance didn't even know reinsurance existed. So the idea is that their costs, and they may want to actually compare various insurance companies just based on what kind of reinsurance rates they're paying. I think it is also a thing of understanding that climate change and global warming are impacting our pocketbooks. I mean, whether you want to believe whatever it is about it, these companies are charging us for it. And I think that needs to be understood and put in front of people. And I think that a report that comes out of this committee would detail all of that better than I did here.
Further question, may inquire.
So the point of the bill is to make the people who have property and casualty insurance conscious of climate change.
Climate change and the cost of it, especially the cost.
Well, you're using the cost of the climate change in the insurance to make that an issue.
I believe so. Although some other folks behind me might have a different take on it, and that's why it's a commission to find out if maybe there's a better take on it.
Okay. Thank you very much.
Thank you.
Oh, do we have, Representative Teresa?
So just to clarify my understanding, when we get quote from the insurance company for a homeowner insurance, does it already contain the reinsurance premium in that, or is it separate?
Yeah,
Somebody has to apply for it.
It's included in your premium. When you pay a premium, a percentage of that is going over. It's the insurance company that decides to buy it.
Okay.
Insurance company purchase that reinsurance because depending on where you live and whatever, it could be dangerous. They may not be able to fund all of it. And so they'll buy reinsurance to be able to make sure that they
They're
can always pay
hedging
off to you.
their
So it
bets.
contains.
They're
Quick
hedging their
follow-up.
bets.
Okay. Another question, follow up.
Okay.
So I think the bill that you have put through, you are basically focused on impact of extreme weather on the reinsurance market. But when you presented in your presentation, you have put all three things: climate change, cyber risk, and rising litigation costs. So do you want to focus only on the climate change part, or do you want
Yes,
to focus
only
all
the
three?
climate change part. I put the other ones in to just make everybody understand that reinsurance is looking at a few other things as well. And there's other things we could put in there that they're looking at, but it's climate change is the number one thing that they're
That's what you
looking
want to
at.
focus on this bill. Thank you.
We're all set. Tom Irwin from Conservation Law Foundation.
Mr. Chairman, committee members, my name is Tom Irwin. I direct the New Hampshire Office of Conservation Law Foundation. We are a New England-wide environmental advocacy organization working on a broad range of environmental and health issues. I appreciate the opportunity to speak today regarding HB 1056, which CLF supports, and we urge the committee to vote ought to pass. As has already been discussed, reinsurance plays an essential role in the insurance industry. It's insurance for insurers. It allows for risks to be spread across a global pool, and for losses to be distributed across much wider pools of capital, reducing volatility and improving predictability. Unfortunately, as Representative Spear mentioned, the increasing frequency and severity of catastrophic weather events is driving reinsurance costs up. Global catastrophe reinsurance prices have increased by approximately 76% just since 2017. Reinsurers also are covering a shrinking portion of catastrophe losses. This all means that New Hampshire businesses and families, homeowners, are paying more for less coverage. In New Hampshire, state filings show that in 2023, insurance rates increased by an average of 8.25%. So all of this means one more cost that families and businesses are bearing. And, the implications economically go beyond those direct impacts to also affect our housing crisis. It makes home ownership more expensive. So we really appreciate this bill. We think it's important to set a table for the legislature to look into this issue, to get ahead of it. Again, it's one more cost that's being borne by families and businesses. We think there'd be real benefit for our legislature to be taking a hard look at this. We've seen what's happened in other states, and I'm not suggesting that what's happened in Florida, for example, with insurers fleeing the state is going to happen in New Hampshire anytime soon. But the pressures being felt by reinsurers, which are being passed down to primary insurers and to businesses and families, are real. And those pressures will only increase with time. I do have written comments that I will distribute, and I'd be happy to take any questions.
Representative Thaxton.
How is this bill going to do anything to reduce costs? I don't see that there's anything in here that's going to, the climate change, we'll assume for all purposes of discussion here, yep, it's happening. Yes, it's increasing cost. Reinsurers, it affects their costs, which it affects primary insurers' costs. What is this, has this helped Joe Smith, who has a house at 123 Happy Street?
It's frankly, Representative Thaxton, it's a baby step. It's providing legislators the opportunity to dig into this issue more with the input of industry representatives, with more data to understand what is the current resilience of our insurance industry in New Hampshire and what might be the resilience of the insurance industry 10 years from now. It's getting ahead of this issue. As you know, this could have been framed as legislation to change laws in certain ways. This is basically creating some study opportunity before going down that path, if it's determined that that path is necessary.
Okay. Representative Teresa.
So just trying to understand it further, you mentioned that the reinsurance uses global pool to determine how much premium to increase. Is that global pool at the country level or is it at a state level?
Literally the global level.
US level? So
International and US. Yes, the US and beyond. It's a global market, and again, is effectively insurance for primary insurers, providing a hedging tool, providing capital that an individual company would not have access to.
quick further.
Further question may inquire.
So even if the extreme weather condition that has been put in these notes, like hurricane, flash flood, severe storms, wildfires, even if most of them do not happen in New Hampshire, you're saying that New Hampshire residents still have to pay for premiums because of those events that increases reinsurance policy premiums?
Yes, basically, no, New Hampshire and, no single state is immune from the economic impacts that occur when, a massive part of Los Angeles burns or major catastrophes cause damages that insurers have to pay. It's a global market. It has implications. And the major implication is that reinsurance costs are going up, and that is also causing primary insurance costs to go up. So when you pay your premium to your insurer, those costs have already gone up some and will likely continue to go up, in part because reinsurance costs are going up, affected by extreme weather events happening
In other states?
in other states, yes.
Thank you.
We do have someone from the insurance department next, so. Thank you very much. Good to see you.
Thank you.
Okay, do you really want him, or do you want to have the insurance department? Okay, sorry, Tom. Yeah, he, okay, Christian Citadel from the insurance department.
Hello, my name is Christian Citarella. I'm Chief Property and Casualty Actuary at the New Hampshire Insurance Department. Commissioner Betancourt and others, including myself at the department, met with Representative Spear in the fall to discuss this bill. We said to her then, and I say to the committee now, we are available, the insurance department is available and willing to help you individually and collectively understand the insurance marketplace. We can conduct research and connect you with experts at the National Association of Insurance Commissioners who review catastrophe models and assess strains on property insurance markets. It is true that reinsurance costs do increase when there is reason to believe that an increase in catastrophe risk is on the horizon. And it is true that some of those increased costs will get passed on to homeowners in their premiums. But it is not my assessment that the dramatic increases in homeowners insurance premiums are as dramatic as they are because of reinsurance alone, that there are other aspects to the increase in premium for homeowners. We are happy to participate in the proposed commission if this bill becomes law. If not, we are still there. We are here as a resource for the legislature. I'm happy to take questions.
Oh, for instance, construction costs are going up.
Right, and just the cost of lumber.
Right.
If you're going to rebuild a home after a fire, it's going to require a lot of lumber, and the cost of that lumber is going up. The cost
Okay.
of labor is going up. Sorry.
Representative Ammons first. Oh, you really needed the other guy? Then why did you wave off on him? I can bring him back. Okay, Representative Herbert.
I was just curious, and I think you mentioned something that it's true. A lot of the reinsurance costs are the result of the product costs of whatever burns down. In other words, something that was $100,000 and gets burned down, 10 years ago, it's 110, and now it's 250. So
Right.
I don't.
Lumber costs are up.
Well, inflation, and a lot of it is debt, and that's something you can get at. I'm not going to talk about it now, but the fact of the matter is, there's a lot of debt that's pushing things higher in price.
Would you believe?
Would you believe?
Okay, we all set?
Yep.
Okay. Oh, Jesus. Okay.
Because I do see insurance quotes, and usually they do mention that, the extreme situations like earthquake or hurricanes is not covered. So but the question is that does the, first of all, it's not covered. And secondly, does the consumer have choice not to just not to opt for it? Or do they have to take it?
So when it comes to reinsurance, an insurance company that may handle homeowners insurance, say, they're going to buy reinsurance to cover their exposure countrywide, right? So they are covering some earthquakes somewhere, right? Or they are covering hurricanes somewhere, right? So even if the individual policy doesn't, has an exclusion for earthquakes, the insurance company itself is still exposed to earthquakes. And so they're going to buy reinsurance for that purpose. And some of the costs of that reinsurance will get passed on to the homeowner who even didn't buy earthquake coverage. Does that make sense?
Okay.
Great.
Thank you.
Okay, Representative Saxon.
Is there anything in this commission that you see that would be generating new information that you don't already have?
Very difficult to answer because my experience with commissions, they tend to find things that we don't currently know.
They go off in all kinds of crazy directions.
And you just don't know where they're going to go, what kind of questions they're going to ask, who they might be able to get in front of them to answer questions, so it is reasonable to say it would come up with something new, yes.
Further question, may inquire.
Then let me rephrase my question. Do you see anything in this proposal that would be generating information that you think that you really need or feel that there's a severe and consequential lack of in terms of information?
I mentioned, we have a lot of resources at the department, and we would be happy to work with legislators individually or collectively to get research and expertise before you if asked.
Thank you. Tom, would you be willing to take another question? That'd be great. Thank you. It's for you. You wanted Tom, right?
Thank you, Mr.
Yes, I'm
Chair.
back.
My stomach is grumbling because it's noon, but serious inquiry on my part. It sounds like you're very steeped in this issue of climate change. It seems like this is an avenue to sort of demonstrate the threat of climate change by using hard facts and hard numbers in this reinsurance market because they have an economic incentive to understand it as completely as possible. Where are we in climate change? I mean, the short question is how much time do we have left? Yeah, I mean, that's the short question.
That's very short.
Thank you,
You hear that
Representative.
ticking sound?
Thank you, Representative. I think the bottom line is we're seeing significant impacts from climate change. Those impacts are manifesting themselves in multiple ways, including economically, and this is one example. But in terms of how much time we have, I mean, the scientific consensus is that we need to make significant progress by 2050. Otherwise, things become even more severe. I think the bottom line is we're seeing significant impacts, and I mean, turn on the news any week and we see them.
I don't know. I remember when Al Gore came out way back when and said at the turn of the century it's going to be, and so we're already way into it by now. But.
So that 2050 year is the scientific consensus on when certain emission reductions should happen by.
Should have happened by.
So.
Thank you, Nita. Okay. No, you can't ask a question. It's your bill.
I'm not going to ask a question. I'm going to state what you believe.
Okay.
there is an outfit called Berkeley Earth, and they monitor the temperatures and water all over the planet, and they do it every single month. They put out a report, very visual, all kinds of graphs put together by just about every weather service on the planet. And you can see the results of, and you can see the effects of climate change as it's going along. And I have found them to be very reliable. And just because today here it's cold doesn't mean someplace else isn't. I mean, the West hasn't even gotten snow yet. Meanwhile, Florida has a foot, or so somebody said. So Berkeley Earth, I think, is where you might want to see some of that stuff. Would you believe?
Thank you. Say hi to Scott Wakeman for me. Okay. Seeing no more cards, we close the public hearing, and I believe.
The jet stream and all that. That'll take care of itself. Yes.
So why can't they just call it climate? Some of them may.
Yes, climate is impacting the world.
50 years, I'm not going to be around, so I'm not worried.
The money that's going from.
Okay.
Already did my baby stuff.
So, many years ago, we actually had the committee had a road trip. We went up to a cidery that's I don't know, Hopkinton or I think he's in Hopkinton. And so, and I remember Dave Leno, Representative Leno, was on the committee, and he says, "You got to talk to this guy, John. He got an issue." And so I introduced myself to him, and he said that his complaint is that he's a cidery. That he often has customers who come in with their family members or friends or whatever, and comes in, and they just don't want to drink cider. They want to drink beer or wine, or just some other beverage, but no, they don't want to drink cider. And I said, well, that's too bad. We just had allowed the fact that it would allow the beverage manufacturers to be able to offer alcohol, and we hadn't really, and at that time we hadn't really solved the pint issue and the how many you can have and what in the food requirements. It was still out there. So now we turn the clock back to more recently, and as some of you noticed that we have an incredible amount of people selling cider and beer and manufacturing it and selling it in their locations. And frankly, the market is incredibly flooded. And so now my son-in-law, who does cider, said to me, John, it'd really be nice that we could also have some other product other than cider, just so that, people wouldn't feel like that's the only thing they would have to drink. So what I bring to you is a bill that is, yes, it does trample on the three-tier system in the sense that now we're going to allow a beverage manufacturer to actually have somebody else's product in their location. That product must be a New Hampshire product. So if they want to have a beer, they got to have a New Hampshire beer. So at least we're not broadening the market too much, but we're allowing these small manufacturers to help promote each other and help benefit the rest of them. And that's it.
Any questions? Yes, Representative.
Thank you for your in-depth knowledge of this very arcane structure. So what happens if I happen to know a manufacturer that manufactures distilled spirits in the state using all state resources and wants to sell their product in his cigar bar? Is that something that this bill would cover?
Um,
I mean, it's not wine, but it is another, it's a distilled spirit.
I guess I'd have to look to Matt, but this bill does not affect distill. This is only beverage manufacturers, beer and wine. In terms of if he has a cigar bar, which is a license, and that's a very unique license, because they can smoke inside there where
But
nobody else.
you cannot charge for food.
And you cannot charge for food. Correct. So, in terms of if he's also got a distillery, then it would probably be very similar to that other bill the first bill we passed today, which was that, in terms of multiple license, the distiller and the cigar bar. But you'll have to ask Matthew that question. But I would say probably that we would use the same structure.
Thank you. Representative Thaxton?
Well, so you referenced this, the first bill we had. So if I make cider and I now want to sell a New Hampshire beer, I could do that. Would I be able to, is this going to work in such a way that I could also sell donuts or a hamburger or a hot dog? Is that?
Well, if you're getting into those food items,
Yeah.
then you really want to get a food license. In terms of those, what our food requirements now, it's a little more narrow in terms of we set it up so for promoting food trucks. To have a food truck there to the food, because most beverage manufacturers, they do not want to be in the
Food business.
food business.
But but we do have those circumstances where people are. We heard that, Bill.
A brew pub is.
Right.
They can have a brew pub license.
And so you get a brew pub license
And the benefit of a brew pub license, they can sell distilled drinks.
and now they can sell, and they could have always sold cider.
Right.
Got it.
Representative Walsh, this is like, would you believe it?
No, no, it's a question. Because I am getting confused, pardon me, with this versus that other bill that we were talking about.
Yeah.
So if, for instance, in my town, there's a winery, are you saying that he can only, with this bill, he can only sell New Hampshire-made beer?
No, I'm
no.
saying under current law,
Okay.
he can only sell his own wine, period.
Right, I understand.
This bill will allow him to bring in some other wine or beer that's made in New
Right,
Hampshire.
I get it. Follow up. So why wouldn't you make it that he could also sell New Hampshire-made vodka or New Hampshire-made bourbon?
Distilled is a whole nother problem, a different level when it comes to beverage manufacturing. So yes, and as you know, we have rectifiers.
Oh, God.
And a rectifier is someone who imports the distill. And they are the bad boy. They're the lowest level. We don't even let them have tastings. Okay, so yes, we do have whiskey tasting, and yes, whiskey. In terms of the cigar bar, I believe we allowed whiskey and wine into the cigar bar. So there was the limitations, but in terms of a whiskey bar, then having beer. We're taking little steps with this legislation, and maybe we can do something like that in the future. But at this point, we don't want a shot in a beer would shoot the day for them as a customer if they didn't have food.
Representative Sullivan?
Well, I'm glad you brought this here because I think it sounds like it's solving a real problem you identified, and I always appreciate that. But would you believe that I think what I've learned on this committee in my 2 terms is that our alcohol laws are just held together by a bunch of Band-Aids as we continue to try to fix one thing after another versus having like a more streamlined alcohol regulation. And someday, I don't think I'll be here after this term, but if I ever come back and I'm sitting in that chair someday over the next several decades, I would hope that we could get to a place where we don't have to Band-Aid after Band-Aid after Band-Aid, and just have a more streamlined alcohol regulatory framework that makes sense, it isn't quite so convoluted, and makes it a little bit easier to establish enterprise in our state, because it seems like we have to come back and do these little Band-Aid solutions a
Well,
lot, so.
we've had this conversation before.
No, I know we have.
And what I would say is you will be incredibly unable to do that. And because every one of those licenses that we've issued now has they have their constituent, they have their protectionist philosophy. So to go back to
What have we
all those
learned
people
from
and say, heck, we're just going to throw it open and get rid of all these regulations and then just have free for all. Every one of them is going to say, no, I've invested a lot into this license and I want protectionism for my license.
Man, what have we learned from that?
But I would say one thing I learned over the years was that I always thought liquor laws were the only upside down laws, where everything is legal until
Zoning's the other one, yeah.
But zoning when I went to my vacation rental, I learned that zoning is even more draconian than liquor laws, and because you have to spell out the exact purpose of that property, and you can't even vary it one iota. At least we're allowing a little bit of variation when it comes to liquor. With that.
Anybody else? Thank you, Representative Hunt. Chair calls C.J. Haynes.
Hello, I'm CJ Haynes. I'm the Executive Director of the New Hampshire Brewers Association. So I represent nearly 80 of the breweries in the state, and I can help answer some of the questions you might have had earlier as well. But what we're in support of the bill as the intention of the bill. Some of the language will shift likely in the weeks ahead, but what I want to convey is that, as Representative Hunt had mentioned earlier, is there are situations where, for example, you walk into a cidery and you want a beer because the other person that's with you doesn't drink, or you walk into a winery and that winery can't serve you a beer, but you want to drink a beer, they only have wine. What this allows is it maintains what is already currently in place for these manufacturers. Right now, these manufacturers, with the licenses that they have, meaning they can obtain a license to serve food. If they have a license to serve food, this is kind of irrelevant because it means they can serve whatever product they want. If they do not have food, they are limited to serve one beverage or two beverages with food from a third party, meaning they could have a food truck or somebody could order a pizza into the brewery or the winery. So what this would allow is more parity of the experience for actually the consumer, meaning that a consumer can get the same experience if they go to a winery or a brewery and get New Hampshire made products from a winery or a brewery. And also if they were to go to a cidery or a kombucha place. And this allows just a better experience for the consumer. The other part of this is it allows for the producers of said beverages and wine to not have to invest in more infrastructure for their own establishments to say, I'm a brewer, I don't necessarily want to invest in a full kitchen because that's not my expertise, but I do want to offer the consumer a better experience because I'm also friends with the cidery and winery down the street from me, and it would be a great experience if I could serve them those alternative beverages in my establishment. So this would allow that person to come and do such. The other element of this is it actually benefits when we did sit and have conversations with the Liquor Commission, Representative Hunt on this, is we did look through all of the key stakeholders when we make bills. And now that we've kind of entered, I've been doing this for almost 10 years now. So with the alcohol laws is our association really values working with the Liquor Commission and the other craft producers in the state to make sure that as we draft bills, we're considering all facets of it. So there was concerns about distillers. part of the reason with the distillery is that that's a different license type. It's a different tax structure. So that's where that gets a little washy on how to, okay, if you can serve alcohol as in wine, as in spirits, then your taxation is going to be different for that product itself. So if they were to produce it, they'd be a different tax rate, all that. But it also has to do with the license structure that's currently already in place, meaning that if you have a food and beverage license, we typically call that a beer and wine license, and then we move up to the cocktail license. And that's the license where you have to have more of a full meal. You have to have seated, like 20 seats, a solid food menu to offer your consumer if you're serving alcohol. So that's where that part comes into play. But we also sat and had a conversation about how this will impact the distributors in our state and the wholesalers. What this does is actually open up more accounts for the distributors and wholesalers, because if you wanted to, for example, to serve Tuckerman's cider at your brewery, you would still have to go through the distributor to get that product to your brewery. And the same would be for wine. If you wanted wine, you'd have to go to the state. Same, all of that still exists. And then I know that there was conversations about how this would impact restaurants. Currently, it would not change what a beverage manufacturer or winery can already do. That all stays in place. They can only have a full experience if they have food available, meaning so in these circumstances, it would only be 1 to 2 drinks for the person. They couldn't have more than that in that situation. So with that, I will answer any questions.
Okay, thank you, CJ.
Yeah.
Representative?
Thank you. And I support this concept. I think it's a good idea. But just to kind of illustrate Representative Sullivan's point about how these laws get more labyrinthian, I have a question, devil's advocate question. I guess first part of the question is, can competitors sell each other's products?
It's part of the conversation in this. So if I were a brewery and I wanted to sell, do you mean retail or just on tap?
Just whatever this bill does, I guess it's
Okay.
at the location of the brewery.
Yes, so you would be able to sell the other person's product.
So second part of my question, let's say I have a competitor and maybe I sit their beer aside for 6 months or something, let it,
Let it get over.
let it get old. And then I present that as their product to sort of undermine, like mine tastes better than my competitor. Is there anything to prevent misrepresenting your competitor's product in this?
I don't think that
You
would
see
be
what I'm
the
saying?
intention behind it because
I know
I
it's
also,
not the intention, it's devil's advocate, right?
yeah, I
Th-
understand.
Things, sneaky things happen in the marketplace and
Well, the only reason I say that is because that the brewer would have to purchase that product, so they had to pay it, and then they'd have to recoup the cost of that. So if they were to do that, they'd be actually losing money because they wouldn't then be selling the product.
but they'd be they'd make theirs taste better than.
They could, yes, but
That's not
but
what-
I don't think that they would want to pay the upfront costs to do that.
Okay.
Thank you, CJ. Okay, the chair calls Ash Fishbein from Ospey, New Hampshire.
Good afternoon, everybody. Thank you, Mr. Chairman, Vice Chair, and committee members. I am just young enough or old enough to use paper and pen, but I'm just young enough to use technology. So,
It's on, yeah. Just pull it closer.
It's on.
pull it closer. There we go. No problem. Yeah, thank you for having me here today. My name is Ash. I'm a New Hampshire small business owner. I hold 3 restaurant licenses, a brew pub license, 2 winery licenses, and a beverage manufacturing license. Soon a second one of those. Monthly taxes are fun, but I digress. I'm in favor of the intent of this bill. I'm here in support of HB 1765 FN because it fixes a very specific, very practical problem in our current law. This bill allows New Hampshire wine and beverage manufacturers to offer tastings and sell qualifying New Hampshire-made products, essentially creating a freer market in a controlled, transparent, and already regulated environment. Right now, we have a system where the product is made here, the business is licensed here, the operators are trained and compliant, but the law still creates artificial barriers to tasting and direct sales. That doesn't protect the public, it just protects confusion. Tastings are not reckless behavior, they are how customers learn, how small producers compete, and how local brands survive against national players with massive marketing budgets. HB 1765 doesn't weaken oversight, it aligns authority with reality. Lets responsible licensed manufacturers operate in a way that actually makes economic sense. For small producers like me, this means better customer education, stronger margins, and more money staying in New Hampshire. This bill supports local agriculture, local manufacturing, and local jobs without expanding risk. A little commonsensical side to this is having all of those licenses, I'm unable to realistically sell one of my products at another location. At one point in time, our brewery, Hobbs Brewing Company, was the largest self-distributed brewery in the state of New Hampshire. It wasn't that long ago. Opening up other licenses to allow us to sell to would change our business. I imagine it would change a lot of other small businesses with like minds. I also own Sap House Meadery, which is a honey winery. A lot of times people go to a meadery or a honey winery not knowing what to expect. Most of the time they're surprised and enjoy what we produce, but a lot of times they want to sit and hang out and we can't offer them, or at the time couldn't offer them any other alternatives to those products. I think this opens that opportunity, especially with the specifications of being New Hampshire made. I think that shows solidarity amongst members of its industry. I also think, to Representative Aman's question, is the intent of this bill would allow a brewery per se to bring in a product that it probably doesn't already produce versus bringing in a like product to compare to. I think that side of this bill and its intent sings more praises than the alternative and what was questioned. With that all being said, I respectfully urge the committee to recommend this as ought to pass with the intention set forth. Thank you all very much, and I'll take any questions if you have any.
Thank you, Ash.
Thank you all
There
very
are
much.
No questions. The chair calls Byron O'Donnell III.
Thank you for letting me testify here today. I am in support of the intent of this bill. My name is Byron O'Donnell. I own and operate Crucial 10 Craft Cider in Thornton, New Hampshire. We do hold a beverage manufacturing license, but we specifically only make cider. So we were very excited with the intent of this bill, so we could offer a beer option to our guests that might not be cider fans when they come in there. Maybe they're bringing their significant other or a family member or something like that, and they just want to enjoy a beer. So we are excited with that side of this bill. We're also excited to be able to offer a gluten-free option. Cider is always naturally gluten-free, so we're able to offer this to all the breweries across the state, so they can now offer their guests a gluten-free option without having to produce it themselves on property. There's a lot of cross-contamination when it comes down to it, and people that are gluten-free or might have a disease where they cannot intake gluten can't have any cross-contamination between even when they manufacture this product and the tanks and stuff like that. So once again, we're never going to make a beer on property. We're excited with the intent of this bill, so we can actually have beers come in, and then on top of that, we'd be able to offer a gluten-free option to the other breweries around the state. That's it. Thank you.
Okay, any questions? Thank you, Byron. And with that, we're adjourned. See you back at noon, or 1 o'clock. 1 o'clock.
brewery in Littleton. And our entire model has been based around keeping the dollars in our community, where our ingredients are sourced from New England. A lot of them are actually grown within view of the State House here at Morrill Farm. And so being able to support other New Hampshire manufacturers is really in line with what our intent of starting up our brewery was. I've been a 20-year commercial brewer. I have no expertise in running a restaurant or producing cider. That would require a lot of extra licensing and equipment for me to take on. So being able to do this really opens up a whole nother group of consumers for us. And we are in a tourist town, so we do get large groups of people that come through, and often you'll see a group of, 8 or 10, and 1 or 2 don't enjoy beer. And so now we'd be able to access them as customers for our entire space. And that would be really great for our business. The other thing is it opens up accounts for us. We can sell to other breweries. One of the things that we don't get to participate in is when we pour each other's beers. So we'll get together and we make a beer together, and I will often be the only one, because I don't have a restaurant, that cannot serve that beer that we collectively brewed together. And that'd be really nice for us to be able to do that as well as throw other events if we want to, throw some kind of party that celebrates something grown here or something along those lines. We then get to do that now because we can have other breweries process that ingredient and produce something with it. And then we get to showcase other New Hampshire made products. And the other thing is it also opens up, like I said earlier, an account for us for the distributors. That for us is a big deal. We want to serve other products, and we have to work through distribution for that. Cool. Any questions?
Good question.
No? Cool.
Okay.
Thanks,
See-
everybody.
Okay, thank you. I just received by airmail another pink card. Matthew Culver.
Thank you, Mr.
Oh,
Chairman and committee
I recognize
members.
him.
Lieutenant Matthew Culver, New Hampshire State Liquor Commission. I think the industry members have done a great job explaining the intent of this bill, but happy to answer any questions that you might have. Can you repeat the question if you
Is that what
could?
you were- Just my question earlier about competitors, I'm not saying anyone's going to do this, but the possibility of misrepresenting a competitor's product and, sort of downplay their market share.
The industry members, especially the in-state manufacturers, work very closely together. Many of them already have partnerships. And I just don't see that being a possibility that they would.
They could try to get away with it for once, but then the person would stop sharing their product with them. They wouldn't let them have so. They might do it once, but they won't get because it would, obviously the other guy would say, I'm not going to do that. But I think the other comment that was made, it was really appropriate, which is that if you're a beer guy and you're never going to make a stout, why wouldn't you get a stout from somebody else? So, but the other question, which was the
Direct to consumer.
direct to consumer.
So a liquor manufacturer, and thank you for the question, Representative, the liquor manufacturer does have an option to use the direct-to-consumer portion of the statute. It's 17827B. We discussed it earlier today. But they can sell under limited quantities directly to an on-premise account. So they would be able to sell directly to a cigar bar.
But what if the cigar bar is
Excuse me?
Turn your mic on.
May I ask a question?
Yes, ma'am.
Thank you. What if the manufacturer of the distilled spirit is the cigar bar owner? It gets a little complicated.
We may have to discuss that further. A liquor manufacturer owns an on-premise.
Cigar bar. And he,
Yes, it would still apply.
he
I mean,
offers his
yeah,
own
it still applies.
spirits at the cigar bar,
Right.
but he's
yeah.
not allowed to sell that unless there's a distributor involved, correct?
Not with a direct-to-consumer permit. So they obtain a direct-to-consumer permit and under limited.
Existing?
Yes, it's existing law, 17827B. Yes.
Thank you.
Yes,
Representative Walsh?
Thank you both, Chair and Vice Chair. Okay, what you had said in the beginning, so I'm just trying to understand this. Can a winery offer New Hampshire-made beers. Okay. And vice versa. A brewery can offer New Hampshire-made wines
That's correct.
or ciders.
Under this law change,
this- yes,
yes,
if this
yes,
passes.
that is the intent of this law.
All right.
Yes.
That's, no, I actually, that gal did a great job of explaining that.
Any other questions? Thank you, Lieutenant Culver.
That, okay.
Are we doing?
At this point, you should just knock it down.
Lay it flat.
Are we doing this?
Yes.
Perfect.
I don't think they have one that says exact. Okay, we'll open up the executive session. First bill I have here is HB 1080. And I move that we interim study 1080. You ready? Sorry. She's got to find her sheets. Too many piles.
So we are.
Interim study.
Wait a second. HB 1080.
Okay, so moved by me and me,
Hey, Carrie.
Hunt. Jackson. He seconded it. Okay, so clearly no state has done this yet. And not that
That's not true. New York has, and New Jersey.
so what they have done is only to the consumer items. They've not actually used this set of condoms. They say all consumer items. So the only reason
mean,
I'm saying
consumer items.
consumer items, right? Anything is a consumer item. So what our bill is very specific in terms of we take things as a specific category. We don't have a broad range of items. And so I think that we can address this issue, but we can take what we have in the current statute and put in something about lubricants. And I'm thinking in the cosmetic section of our statute.
So I was thinking about this after we talked.
Okay.
And is there a way to, versus interim study, but like amend it? Like we don't have, like, is there not a way to do an amendment on this bill?
We could, well, here's the problem. The problem is the bill is an early bill. So we have to have it out next week. And I would like to, that if, in terms of amending it, I would like to spend some time really making sure that we touch base with all the interested parties and make sure that that amendment's going to fly and not crash and burn on the floor. So I'm just saying is that it took us several years to get the PFAS bill passed in the first case, and that there's no urgency in terms of passing this particular subject matter because the law is set up, and so it's pretty expansive as it can be added on. But let's make sure that what we pick and choose, that it's well thought out and explained and not going to be controversial. And I am very concerned that this bill, as it's written currently, is going to be very controversial. And so all I'm saying is, let's work on it this year, and then next year we'll bring in a new bill that everybody can live
So
with.
you're on record promising to work on this.
And
right?
I
Not just
guarantee
killing it
you,
quietly.
I'm not killing this quietly. I guarantee you that I am trying to find the least invasive way to pass this legislation without having a headline that I think we would all be embarrassed by.
All right, as long as we have your word on it, because I think this is important.
I hear you.
And I know that there's been confusion, but since the last time when you guys talked about it, I did do more research on it, and this is a big driver of cancer for both kidney and testicular cancer. And so I think that that's something that, given what we're talking about, is very relevant, and we need to take that seriously. I appreciate your point on the condom thing and being labeled as we're banning condoms. I don't know if that would happen, but I hear your fear. But yeah, we need to actually take this seriously because this is a very serious matter. And the idea that PFAS, I've heard a few people say that PFAS hasn't been proven to cause these diseases, that is completely false. That is totally false. When I hear people say there hasn't been like a control study, there has been. That's also false. And The only thing that hasn't been done is some sort of double-blind randomized study, because you can't do that when you're talking about PFAS, because you're talking about literally poisoning one group of people and not poisoning another group of people, and then seeing what happens. That's what they do in labs with animals, and they've done that for PFAS in animals, and it has destroyed animals very rapidly, because I've researched it. Rats, dogs, they've experimented with these chemicals on all these animals. Yeah, you don't like it. It's not comfortable, but it's how it works. That's how they do these things. And so I think it's really important to people to realize that there's misinformation being put out there that PFAS, or maybe the science isn't settled. Well, the largest epidemiological study, on one of the largest ones in history, of over 70,000 people in the Ohio Valley was done on these types of chemicals, and it was incredibly extensive. And there was no questioning that this is very dangerous for the health. It leads to 2 types of cancers and 4 other types of diseases, unquestionably. And I think we need to take it seriously and stop looking at some of the misinformation that's being put out there and not be blinded by this, because the health of people in New Hampshire are at stake. And so we need to take it seriously. And I think we need to hold you accountable for your word. I'll trust you, John, but we do know that interim study in this committee is often a silent death with dignity, and I don't want that to be the case for this bill.
I promise you that we will have something for next year. Yeah, Representative Burrows.
I just wanted to say, and I will vote for the interim study, but I do think it's a bad precedent, I guess is the way to say it, that we not pass a bill because we're concerned about bad publicity.
Well, not bad publicity, just inappropriate publicity, that it just.
Oh, I agree, it would be inappropriate publicity on their side, not ours.
And frankly, hurt the cause, so that's the whole point, is that we want to do it in a way in which people can be comfortable with the resolution.
That's what they said about the Civil Rights Act.
Okay. Okay. The motion is interim study. Is there any more discussion on the motion? Seeing none, the clerk will call the roll.
So we'll start with
Petusek.
John Petuchik.
Yes.
Jason Osborne is not here. Keith Ammon.
Yes.
Ms. Post says yes. Representative Porcelli. Yes. Representative Walsh.
Yes.
Representative Paxson.
Yes.
Representative Miles.
Yes.
Representative Pressa.
Yes.
Representative Burrows. Yes. Representative Herbert.
Not here.
Representative McAleer.
Yes.
Representative Spear.
Yes.
Representative Sullivan.
Yes.
Representative Tarasa.
Yes.
Representative Salvi.
Yes.
And Buffer is not here. And John Hunt is a yes.
Yes.
Okay.
What'd you get?
15 to 3.
15 to 3?
I'm sorry.
No, the 3 is not here. 15 to zip. Okay. All right. All those in favor of placing on the consent calendar, please say aye.
Aye.
Those opposed, so moved unanimously. Okay, House Bill 1154, restricting texting of unsolicited advertisements, including political campaigns. Representative Ammon, second by Representative, who did I have, Petuchik?
Yeah, I'll second all these.
Petuchik.
I'll just give you my thoughts on it. I'm as annoyed by these unsolicited text messages as anybody. But I don't think this legislation would fix the problem. For one thing, it's just the nature of the system that we have for text messaging that numbers can be spoofed. It's part of the foundational technology. They didn't think of preventing spoofing. So that's really the key thing about text messaging, trying to police it, because numbers can be spoofed. I'll just leave it at that. So I move ITL.
Any discussion on the motion of inexpedient to legislate? Representative Burrows.
It's just a quick comment. I agree with Representative Ammon. I'm finding, at least on my iPhone, there is a way to send all of these into a thing like the Gmail does with promotion, and it has changed my life because my phone isn't beeping every frickin' minute.
Perfect. Okay. The motion is inexpedient to legislate. The question clear. The clerk will call the roll. This is 11:54. Yes. Ammon and Petusic. Petusic.
Representative Petusic?
Yes.
Warner's not here. Representative Ammon?
Yes.
Clerk says yes. Representative Porcelli? Yes. Representative Walsh? Representative Thaxton?
Yes.
Representative Miles?
Yes.
Representative Prisa?
Yes.
Representative Burrows? Yes. Representative Herbert is here.
Yes.
Okay. McAleer, Representative McAleer?
Yes.
Representative Spear?
Yes.
Representative Sullivan? Yes. Representative Tarasa?
Yes.
Representative Salvi?
Yes.
And Representative Butler is not here. Okay, so we are going
Should be 16, right?
15 to 0.
16.
16
Oh,
zip.
Representative Hunt.
Yes. Okay, all those in favor of placing on the consent calendar, please say aye.
Aye.
Those opposed? So moved unanimously. Okay. HB 1197, making technical corrections to certain insurance laws. Representative Miles, second by Representative Burrows, moves ought to pass on the amendment number 0519. This is the department bill that I sponsored.
Yeah.
Anybody want to speak to it? All right, we're all set. Okay. So the motion is ought to pass on the amendment. The clerk will call the roll.
Representative Petusic?
Yes.
Representative Osborne is not here. Representative Ammon?
Yes.
Representative Post is here. Representative Porcelli?
Yes.
Representative Walsh?
Yeah.
Representative Thaxton?
Yes.
Representative Miles?
Yes.
Representative Presa?
Yes.
Representative Burrows? Yes. Representative Herbert?
Yes.
Representative McAleer?
Yes.
Representative Spear? Yes. Representative Sullivan?
Yes.
Representative Tarasa?
Yes.
Representative Salvi?
Yes.
Representative Butler is not here. So we are going to, Representative Hunt.
Yes.
16
16 to zip. All those in favor of placing, excuse me, we're not there yet.
Gotta vote
Okay.
the
Now,
motion.
ought to pass, the pending motion is ought to pass as amended. Moved by Representative Miles, second by Representative Burrows. That was amendment number 519. It was the first vote. That was the first. You did a separate sheet. Okay.
What are we doing on this one?
You got to stay. Yeah, we're still on 1154. Wait a minute. No, this is 1197. So it's not that sheet.
Back to this one.
Right. So the first vote is adopting the amendment. That was 0519. Okay. Now we're down to ought to pass as amended.
Again, Miles Burrows.
Yep. Yeah. Okay, the clerk to call the roll.
The next one.
Don't take that sheet away.
Keep the sheet.
Oh, yeah, well, you could, but you can do another voting sheet if you want.
Oh, give it to Osborne. Oh, that'd be hilarious.
So Representative Pachek,
This is ought to pass as amended.
Oh, yes.
Representative Osborne is not here. Representative Ammon.
Yes.
Representative Post. Oh.
She's sick.
Representative
She's getting,
Pustilli.
she's getting a little cold.
Representative Walsh. Yes. Representative Paxton.
Yes.
Representative Miles.
Yes.
Representative Pressa.
Yes.
Representative Burrows. Yes. Representative Herbert.
Yes.
Representative McAleer.
Yes.
Representative Spear. Yes. Representative Sullivan.
Yes.
Representative Taraza.
Yes.
Representative Salvi. Yes. Representative Butler is not here, and.
Yes.
16-0.
Motion was.
Ought to pass as amended. Okay, all those in favor of placing on the consent calendar, please say aye.
Aye.
Those opposed, so moved unanimously.
Yes.
Okay, next up, establishing the paint product stewardship program, House Bill 1198. I move interim study. And Representative Petrucci.
Second.
As you all know, that this bill is on its way to the governor's desk, and we'll see what happens. She had something, she kept calling it a tax. So hopefully she'll read it and see that there is no tax in it.
So we're doing not to pass.
This is interim study. Okay? Is the motion clear? Interim study? On the paint bill, yeah. Well, we've already passed it, and it's on the way to the governor's desk, so. But, so, yeah, no, they actually passed it out of the Senate. Believe it or not.
Believe it or not.
But, okay. Interim study.
Excuse me. Representative Petrucci.
Yes.
Representative Osborne is not here. Representative Hammond.
Yes.
The clerk says yes. Representative Purcelli.
Yes.
Representative Walsh.
Yes.
Representative Paxton. Yes. Representative Miles.
Yes.
Representative Pressa.
Yes.
Representative Burrows. Yes. Representative Herbert.
Yes.
Representative McAleer.
Yes.
Representative Spear. Yes. Representative Sullivan.
Oh, yes.
Representative Salvi. Did I
Yes.
get you? Did I miss
Taras,
you?
yeah.
Representative Tarasa and Representative.
Yes.
Salvi. Thank you.
Yes, yes.
And Representative-
Yes. Okay, vote 16-0. All those in favor of placing on the consent calendar, please say aye.
Aye.
Those opposed, so moved unanimously. Okay, HB 1444, relative to the purchase or acquisition of certain unmanned aircraft systems. Representative Spear, second by Representative Petrucci, moves ought to pass on the amendment number 0381. Okay, Representative Spear, do you? Yeah, just what the amendment did.
Coming from a military background, coming from working in the DOD, we've been doing this for years. So I think that the rest of the political subdivisions catching up is probably a pretty good idea.
So, yeah, the law basically says that they got to follow the federal regulations, the bill as rewritten. Okay. So the motion is ought to pass on the amendment. Is the question clear? The clerk will call the roll.
Representative Patuchek?
Yes.
Representative Osborne is not here. Representative Ammon?
Yes.
Representative Post is here. Representative Pacelli?
Here, yes. Here.
Representative Walsh?
Yes.
Representative Thaxton?
Yes.
Representative Miles?
Yes.
Representative Pressa?
Yes.
Representative Burrows? Yes. Representative Herbert?
Yes.
Representative McAleer?
Yes.
Representative Spear? Yes. Representative Sullivan?
Yes.
Representative Charaza?
Yes.
Representative Falvey?
Yes.
And Representative Butler is not here. And Representative Hunt?
Yes.
16-0.
Okay. The question now is ought to pass as amended. Any discussion on the motion? Seeing none, the clerk will call the roll when she's ready.
Is it the next one? You do
This
it
is ought to
separate?
pass.
1444 as
We
amended.
do the next one.
Sure.
Okay.
Ought to pass as amended.
OTPA.
Um, Excuse me. Representative Patuchek?
Yes.
Representative Osborne is not here. Representative Ammon?
Yes.
Representative Post is here. Representative Pacelli?
Yes.
Representative Walsh? Yes. Representative Thaxton?
Yes.
Representative Pressa?
Yes.
Representative Burrows?
OTPA.
Okay. Representative Herbert?
Yes.
Representative McAleer?
Yes.
Representative Spear? Yes. Representative Sullivan? Yes. Representative Charaza?
Yes.
Representative Salvi? Yes. And Representative Butler is not here. Representative Hunt?
Yes. Okay, for those who are keeping score, that it was Representative Spear and Representative Patusek seconded. Okay, the vote was unanimous, 16 to zip. All those in favor of consent, say aye.
Aye.
Those opposed? So moved. Okay. All right, HB 1463, requiring the insurance department to conduct an analysis and produce a report detailing the compliance with the state's management care and medical utilization review laws. I would like to move in expedient to legislate, seconded by Representative Purcelli. This is redundant. The department actually does this already, and there was really no need for, but it was well thought out and well stated. But at the end of the day, it's not necessary. It's redundant. Okay, so the motion is inexpedient to legislate. Representative Hunt and Representative Purcelli seconded. Any discussion on the motion of ITL? Seeing none, the clerk will call the roll.
Representative Patuchek?
Yes.
Representative Osborne is not here. Representative Ammon?
Yes.
The clerk says yes. Representative Purcelli?
Yes.
Representative Walsh?
Yes.
Representative Thaxton?
Yes.
Representative Miles?
Yes.
Representative Pressa?
Yes.
Representative Burrows? Yes. Representative Herbert?
No.
Representative McAleer?
Yes.
Representative Spear? Yes. Representative Sullivan? Representative Charaza?
Yes.
Representative Salvi? Yes. Representative Butler is not here.
Yes.
Oh, Representative.
I like the old days where I didn't have to vote. Okay, that was 15 to 1. All those in favor of placing on the consent calendar, please say aye.
Aye.
Any opposition? Okay. On consent. HB 1481, enabling on-premise licensees to sell drinks made with distilled alcohol for takeout.
ITL.
Representative Patusek, seconded by Representative Walsh, moves ITL. We've already passed this, so there's no reason to send another one out there into the hinterlands. So the motion is inexpedient to legislate. Any discussion on the motion? Seeing none, the clerk will call the roll on ITL.
Representative Patuchek?
Yes.
Representative Osborne is not here. Representative Ammon?
Yes.
The clerk says yes. Representative Purcelli?
Yes.
Representative Walsh?
Yes.
Representative Thaxton?
Yes.
Representative Miles? Representative Pressa. Yes. Representative Burrows. Yes. Representatives Herbert.
Yes.
Representative McAleer.
Yes.
Representative Spear.
Yes.
Representative Sullivan.
Yes.
Representative Taraza.
Yes.
Representative Salvi.
Yes.
Representative Butler is not here. And Representative Hunt.
Yes.
Consent.
Voting is 16 to zip. All those in favor of placing on the consent calendar, please say aye. Those opposed, so moved unanimously. Next up, HB 1558, requiring proof of insurance or adequate financial responsibility for vehicle registration. Representative Miles, second by Representative Petusek, moves inexpedient to legislate. Representative Miles, do you want to comment?
Sure. Yeah, the committee does recognize the importance of financial responsibility and public safety. But after review, this committee decided that adding administrative complexity and imposing additional requirements on registration without clearly recognizing improved outcomes or increased degrees of safety, that we move this bill ITL.
Okay, any more discussion on the motion of inexpedient to legislate? Seeing none, the clerk will call the roll.
Representative Petrucci.
Yes.
Representative Osborne is not here. Representative Ammon.
Keith?
Yes.
Yes.
Representative Coe. Yes. Representative Purcelli.
Yes.
Representative Walsh. Yes. Representative Thaxton.
Yes.
Representative Vargas.
Yes.
Representative Priasa. Representative Burrows. Yes. Representative Herbert.
Yes.
Representative McAleer.
Yes.
Representative Spear. Yes. Representative Sullivan. Yes. Representative Taraza.
Yes.
Representative Salvi.
Yes.
Representative Butler is not here, and
Yes.
Chairman Hunt.
Vote is 16 to zip. All those in favor of placing 1558 on the consent calendar, please say aye.
Aye.
Those opposed, so moved unanimously. HB 1568, relative mandatory minimum insurance coverage requirements for motor vehicles. Oh, my name's here. Okay, I move inexpedient to legislate, second by Representative Petusek.
That's yours.
It's this. Wait a minute, no, have I got the right? No, this is relative mandatory minimum insurance. Yeah, right. So this is just deja vu all over again. So another mandatory insurance bill. No, we don't need it. So. Okay. The motion is ITL. Is the question clear? The clerk will call the roll.
Representative Petrucci.
Yes.
Representative Osborne is not here. Representative Ammon.
Yes.
The clerk says yes. Representative Purcelli.
Yes.
Representative Walsh. Yes. Representative Thaxton.
Yes.
Representative Miles.
Yes.
Representative Priesa.
Yes.
Representative Burrows.
Yes.
Representative Herbert.
Yeah.
Representative McAleer.
No.
Representative Spear. Yes. Representative Sullivan.
Yes.
Representative Taraza.
Yes.
Representative Salvi.
No.
No. Representative Butler is not here. And Representative Hunt.
Yes. Fourteen to 2. You two want to leave it on the regular calendar, or you're right to put it on the consent calendar? Okay. All those in favor of placing on the consent calendar, please say aye.
Aye.
Those opposed? So moved unanimously. Okay, 1589, establishing the Digital Choice Act. Inexpedient to legislate. Representative Priesa, second by Representative Burrows.
Move this.
Priesa. Would you like to speak to your motion?
I didn't know I was making the motion.
That's my note said you did.
You don't have to.
Maybe Representative Hammond, you want to help him out with this one?
Which bill are we on?
This is the digital choice.
Digital choice.
I'm not ready either.
Okay. Anybody else want to remember what this what was about? 15.
Seems like a bad idea.
Not ready for prime time.
Okay, this bill establishes the digital choice which requires social media companies to provide users with access to their personal data, enable data sharing across platforms through open protocols and user control interoperability interfaces. Remember this bill? No, we have the motion. You want to make the motion instead?
We'll make
You want to
it-
make a motion?
I'll write the blurb.
Write the blurb. Okay, you're off the hook.
So,
All right.
okay, so thank you for the recall.
Yes,
All these-
I knew you
these-
knew
These
this bill.
bills run together. I think the main concern with this bill is you're forcing sharing of data, and hacking exists. You're giving hackers a
Open door.
a broader surface area to attack by forcing all this data to be shared. So that would be one of the main concerns. Therefore, ITL.
Okay. Any other discussion on inexpedient to legislate? Seeing none, the clerk will call the roll.
Representative Petusic.
Yes.
Representative Osborne is not here. Representative Hammond.
Yes.
Representative Post says yes. Representative Purcelli.
Yes.
Representative Walsh. Yes. Representative Thaxton.
Yes.
Representative Miles. Yes. Representative Prisa.
Yes.
Representative Burrows. Yes. Representative Herbert.
Yes.
Representative McAleer.
Yes.
Representative Spear. Yes. Representative Sullivan.
Yes.
Representative Tarasa.
Yes.
Representative Salvi.
Yes.
Representative Butler is not here, and the chair.
Yes. Okay. The vote is 16 to zip. All those in favor of placing on the consent calendar, please say aye.
Aye.
Those opposed? So moved unanimously. Okay. HB 1606, regulating the real property ownership by Chinese nationals and providing for civil, criminal, and administrative penalties. I have Representative Walsh moves ITL, second by Representative McAleer. Teach you a lesson to what you do in the subcommittees. Will come back to haunt you. ITL.
Would you like me to say something?
I'd love to hear what you have to say.
Well, I believe that the original amendment,
You wrote.
yes, with major help from someone who'll be unnamed. Yes, exactly. Did a much better job at what the initial aim was for this bill, and that it was put into the budget, so it makes this bill unnecessary.
Perfect. Okay, the motion is inexpedient to legislate. Any discussion on the motion? Seeing none, the clerk will call the roll.
Representative Petusic.
Yes.
Representative Osborne is not here. Representative Hammond.
Yes.
Excuse me. Thank you. Representative Post says yes. Representative Purcelli.
Yes.
Representative Walsh.
Yes.
Representative Thaxton.
Yes.
Representative Miles.
Yes.
Representative Prisa.
Yes.
Representative Burrows. Yes. Representative Herbert.
Yes.
Representative McAleer.
Yes.
Representative Spear. Yes. Representative Sullivan.
Yes.
Representative Tarasa.
Yes.
Representative Salvi.
Yes.
Representative Butler is not here, and the chair.
Yes. Motion 16 to zip. All those in favor of placing 1606 on the consent calendar, please say aye.
Aye.
So, right. So moved. Okay. House Bill 1673, allowing certain liquor manufacturers to sell to on-premise licensee. Representative Petusek, seconded by Representative Walsh, moves
ITL.
ITL. Because we've already passed it.
That's right.
So, no, I'm saying we are in previous legislation. Okay, so the motion is inexpedient to legislate. Any discussion on the motion? Seeing none, the clerk will call the roll.
Representative Petusic.
Yes.
Representative Osborne is not here. Representative Hammond.
Yes.
Representative Post is here. Representative Priscilli.
Yes.
Representative Walsh.
Yes.
Representative Thaxton.
Yes.
Representative Miles.
Yes.
Representative Parisa. Representative Burrows. Yes. Representative Herbert.
Yes.
Representative McAleer.
Yes.
Representative Spear. Yes. Representative Sullivan. Yes. Representative Terrazza.
Yes.
Representative Falvey.
Yes.
Representative Butler is not here, and the chair.
Yes. Okay, vote 16 zip. All those in favor of placing on the consent calendar, please say aye.
Aye.
Those opposed? So moved unanimously. House Bill 1679, establishing a beverage container redemption program. Representative Spear, second by Representative Petusek, moves in expedient to legislate. Representative Spear, would you like to comment on Mr. Bottle Bill?
This bill does is it's like a bottle return. You get I think it was 10 cents
10 cents, yeah, not even
on
a nickel.
each
Inflation.
can or bottle. And the biggest problem that I saw, beside the fact that these things don't necessarily do much good, is that stores had to set up places to put the return area right next to the food. So you have these dirty cans and everything right next to the food. And that doesn't seem like a very good idea. So I don't like it.
Perfect.
I concur.
Okay. All right. The motion is ITL. Any discussion on the motion? Seeing none, the clerk will call the roll.
Representative Petrucci.
Yes, definitely.
Representative Osborne is not here. Representative Hammond.
Yes.
Clerk says yes. Representative Priscilli.
Yes.
Representative Walsh.
Yes.
Representative Thaxton.
Yes.
Representative Miles.
Yes.
Representative Parisa. Representative Burrows. Representative Herbert.
Yes.
Representative McAleer.
Yes.
Representative Spear. Yes. Representative Sullivan. Representative Terrazza.
Yes.
Representative Salvi.
Yes.
Representative Butler is no, and Representative Hunt.
Yes. Okay.
16 zip.
16 zip. All those in favor of placing on the consent calendar, please say aye.
Aye.
Those opposed? So moved unanimously. HB 1725, relative to the regulation of artificial intelligence technologies. Representative Ammon, second by Representative Petusek, moves in expedient to legislate. Representative Ammon, would you like to speak to your motion?
Okay. There are some aspects of this bill that the sponsor may want to consider putting back in. But as the bill stands, it's too heavy-handed, and I don't think the economy, when it comes to artificial intelligence, is in a lot of flux right now, and I don't think we want to send a message that New Hampshire is wary of it just yet. We want to study this a little more and let this play out before we start prohibiting things. So
Premature.
So therefore, ITO.
Okay, the motion is in expedient to legislate. Any discussion on the motion? Seeing none, the clerk will call the roll.
Representative Petrucci.
Yes.
Representative Osborne is not here. Representative Ammon.
Yes.
The clerk says yes. Representative Priscilli.
Yes.
Representative Walsh.
Yes.
Representative Thaxton.
Yes.
Representative Miles.
Yes.
Representative Parisa.
Yes.
Representative Burrows. Yes. Representative Herbert.
Yes.
Representative McAleer.
Yes.
Representative Spear. Yes. Representative Butler, and she's in the middle, so she's 0 there. Representative Sullivan. Representative Terrazza.
Yes.
Representative Salvi.
Yes.
Okay, and Representative Hunt.
Yes. Yep. All those in favor of placing 1725 on the consent calendar, please say aye.
Aye.
Those opposed, so moved unanimously. Evidently, Representative Sharice says that we actually did interim study rather than killing the family paid leave.
You're gonna switch this?
So that'll make that interim study. That's a 1761.
IS.
Oh,
61. No, it's the next one.
Oh, it's the next one.
We're moving on.
Did we stay with ITO?
Yes, was that one your ITL? Yes, we just voted on.
Because the bill amended to establish a committee to study.
She came in with a subcommittee amendment, and I guess we were being nice and told her that we'll do it.
I want to remind you what we discussed.
Right. Okay. So, we're at 1761, and the motion is interim study.
Teresa.
Okay. Representative Sharisa. And Petusek.
Chairman,
Yep,
can I make a comment on this?
absolutely.
I will vote against ITL. I think.
No,
this-
the motion's now interim
Interim
study.
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 That's not what it says on mine.
I know.
We changed
You just changed it.
Oh, okay. All right. That sounds good.
That's how we.
Guess
changed
we'll put you on the study committee. Okay. Discussion, the motion is interim study. Any discussion on the motion? Seeing none, the clerk will call the roll.
Representative Petrucci?
Yes.
Representative Osborne is not here. Representative Ammon?
Yes.
Representative Post says yes. Representative Purcelli?
Yes.
Representative Walsh? Yes. Representative Thaxton?
Yes.
Representative Miles?
Yes.
Representative Pressa? Yes. Representative Burrows? Yes. Representative Herbert? Yes. Representative McAleer?
Yes.
Representative Spear? Yes. Representative Butler is not here. Representative Sullivan? Yes. Representative Tarasa?
Yes.
Representative Salvi? Yes. Representative Hunt?
Yes. Okay, vote 16 to zip. All those in favor of consent, please say aye.
Aye.
Okay, last but not least, HB 1812, requiring periodic evaluation of mental health access adequacy by an independent third party. I'd say I would rather study the one we got today than have this one around. So Representative Miles, seconded by Representative Petusek, moves inexpedient to legislate.
And this is the 1725?
This is 1812.
May I speak to my motion?
You're,
My,
yeah,
okay.
go ahead. Speak,
Okay, thank you.
Speak to your motion.
Yes, I want to acknowledge that timely access to mental health services is a very real problem right now. I really do appreciate the sponsor's intent to improve transparency. This bill is a bit overcomplicated and possibly duplicative of some other things that we have underway right now. Specifically, recently, we just passed and enacted reforms to expedite mental health counseling licensure. And so I'm hopeful that that will directly address some improvement in access and also workforce capacity concerns.
Any other discussion on the motion?
So who moved it?
Representative Miles. Representative Petusek, seconded.
And it is
ITL. Yes. Clerk will call the roll.
Okay. Representative Petrucci?
Yes.
Representative Osborne is not here. Representative Ammon?
Yes.
The clerk says yes. Representative Purcelli?
Yes.
Representative Walsh?
Yes.
Representative Thaxton?
Yes.
Representative Miles? Yes. Representative Pressa? Yes. Representative Burrows? Yes. Representative Herbert? Yes. Representative McAleer?
Yes.
Representative Spear? Yes. Representative Butler is not here. Representative Sullivan? Yes. Representative Tarasa?
Yes.
Representative Salvi?
Yes.
Representative Hunt?
Yes. Motion is unanimous, 16 to zip. All those in favor of placing on the consent calendar, please say aye.
Aye.
Those opposed, moved unanimously. That ends our executive session.
Chairman, when do you need the blurbs? When do you need the write-ups?
It'd be great that you work on them tonight and send them to me, so while I'm bearing through the House session tomorrow, I can read them over.
You want them before the House session?
Well, just send them to me while, I'll have my device. All right?
State of the state. He took the long way.
So next week, we're going to do Tuesday, Wednesday, Thursday. Tuesday, Wednesday will be committee stuff. Thursday is a session. Somehow so theoretically, everything we just do today and getting all the blurbs in, we need to get those blurbs in timely tomorrow because they will be on the consent calendar next week, or they'll push them off to the following week. But
So
anyway, so we will be in the Labor Committee next Tuesday, in that committee room next Tuesday.
So there will be a House on the 12th, next Thursday.
Next Thursday will be a House session.
Okay, good.
So Tuesday will be public hearing.
So we're here. Is-
Wednesday also. And then we'll have heard all our bills. Yeah, well,
No,
Den
early
didn't,
bills.
they're telling me I gotta have everything in by March 4th. I guess it's just, everything's squeezed up, so. Nightmare that it is. Okay,
Okay, thank you, Representative Hunt. And I don't have a PIN card.
There is one from a gentleman.
I got one.
Against the wall there.
Yeah, I got one.
okay.
Okay, I am opening the hearing on House Bill 1491. Representative Chairman John Hunt is the prime sponsor.
I guess I don't have Okay, good afternoon, everyone. So this might look a little deja vu-ish.
No kidding.
This is the bill that we passed last year and sent over to the Senate, and they
Screwed it up.
they basically decided that they didn't want to concur with our amendment, and the bill died. So, just to jog your memory, what's in this bill is that we were attempting to accommodate the Senate by putting in the language that they wanted for the risk pools that are going to be administrated by the Secretary of State's office. But then we put in our portion, which was the programs, entities that are would choose, or not really choose, it's the nature of the entity would then be regulated by the insurance department instead. And then we proceeded to write the statute up to create regulatory authority. And that's really, you'll see that over on page 8, 420R, which is the creation for risk pools that are, I forget the phrase, but they are different than the ones who choose to stay separately. And at any rate, so it's everything what we passed last year. I believe it passed the committee unanimously, and nothing has changed other than hopefully the Senate will see the light of day and pass this bill
So this is the bill as we passed it last year.
as we passed it.
Perfect.
Representative Patusek, Representative Spear has a question.
Yes, Representative Spear, thank you.
If you look at the bottom of page 8,
Yes,
now we've started the risk pool, the stuff in the advanced pool risk management programs. That's under the insurance department.
right.
The last line, it says, let's see, pooled risk management programs which meet the standards established by this chapter should not be subject to taxation by the state and, except as specifically set forth in this chapter, should not be subject to insurance regulation. What does that mean in the context of
Okay,
this chapter?
so that means they're not considered insurance companies, that their regulatory authority is 420R. So it's, when you say insurance regulation, in other words, we're not treating them like a typical insurance company. So they're not under that, all our regulations. Insurance companies said, we charge them for a myriad of things, but most importantly is we have the insurance tax. So they're exempt from the insurance tax.
Okay.
So we're basically not regulating them as insurance. We're not, we might walk like a duck, talk like a duck, but in this case, we're making clear that it's not an insurance duck. It is a separate, under 420R, it's a separate risk management program.
Okay, so the insurance department is going to be taking care
Is
of
their
watching
regulator,
everything.
but it just will not.
Call them an insurance
it
company.
not commingle it, and it'll be treated separately.
Okay.
And certainly won't be taxed as they are.
Representative Puccelli.
Can you please go over very quickly for us again, the difference between the assessment pool risk management programs and the advanced premium pool
Right,
risk
that was the phrase.
management?
So basically, in terms of how they're the nature, and this was a nuance that Alex fellow tried to explain it to me, which is totally over my head. But anyways, it's just the nature of how they're set up and how they assess and how they assess the people who are participants in the plans. And somebody with more sophistication can answer it. Unfortunately, the insurance department is not allowed to talk about this bill, so they can't get up and speak because it's stepping on other people's toes, and so they don't want to get get in trouble. So at this point, all I can say is it is a difference in terms of the regulatory methodology.
There are only a handful of these risk pools currently in existence. And if another risk pool were to be developed, for example, if there would be a childcare risk pool initiated,
Right.
would it have to fall under these guidelines if we pass
It,
this?
no, they could still, it counts on the nature of their entity. So we have to look at, I think we got an email from Primex yesterday.
Yeah.
So a Primex is no particular need, they don't want to be under this new 420R. All right, because they're really property and casualty, the nature of their business is different. And so they would just assume stay under the other plan, under the statute. So that's really, in terms of how to visual the bifurcation between the two, is think about, property casualty versus health insurance.
Representative McAleer.
Thank you, Mr. Chair. I've got two questions. First off, I don't quite fully understand the structure of this. It looks like a quasi-private public organization. That's number one. And number two, what are their investment restrictions? Do they have any, or what is their underlying,
Well, it's absolutely quasi. Because that's really where the problem occurred. If you go back all the way to 1980s when the original model, when it originally was created, the theory was that if the cities and towns would come together, or school districts come together, and now we have two different products. We have property and casualty for liability for these towns, and then you have health insurance. So what we're focusing in on is there is not a particular problem with property and casualty. The problem we're really focusing in on is health insurance, okay? And the issue of the health insurance is that even though you might have you have an administrator that's still going to be offered the building, but that the idea was that the cities and towns, or the counties, or entities are paying into this pool, and that's the pool that's going to then pay out to make the payments. So it's that's why we're saying, well, boy, they're exempt from the tax that we would charge an insurance company, a regular insurance company, health insurance company. They're exempt, they're regulated differently. And that the interesting element is the board of directors of these entities is actually the cities and towns. So they're running this pool, okay? And it was funny, I was listening on the news, I don't know, a couple months, and Massachusetts risk pool was having some similar problems. And so this is, it really does cut across multiple states. To make it the long story short, or short story long, that the reason why we really got into this whole crisis situation was that during COVID, nobody was going to the doctors. So their reserves got really high. And under the other structure under that the Secretary of State was under, that didn't have the regulatory authority, was not, have their actuarials and say, boy, Joy, you need to look at your premiums, you got to look at what you're doing, what we would normally do with insurance companies. What they were doing, they got into a situation where it was a free-for-all, and that, the billings went out, and they got to a point where the reserves were too high. They because nobody was making any claims. Nobody was going to the doctor or the hospital during COVID. But that formula back in 2010, yes, I was in the room when it happened. Yes, I voted against it, but I would have to say the other Butler was the chairman at the time, and he rolled over for the Secretary of State Gardner, who was convinced that if these reserves are too high, they should refund the money back. And that's what occurred. They actually started funding money back. And then, of course, after COVID was over, everybody was going to the doctors and in the hospital. And all of a sudden, now those reserves were too low. And that's why we had a bankruptcy. So it was basically, at the end of the day, the idea of what is the best way to regulate a health insurance risk pool, not necessarily the insurance ones, the property and casualty ones, but the health insurance ones, is that you don't want to do it by statute. You don't want the statute to say these thresholds, and that's what you want to do is you want to have professionals, actuarials, who know what they're doing, who are doing it already for regular insurance companies, to be sitting there going over the numbers and saying, by the way, during COVID, you maybe should do what Delta Dental did, which is held the premiums flat during COVID. And so the reserves, were not dramatically affected. That was, Delta Dental is regulated under similar statutes, designed for them. And so all we're saying is that having the idea that you're going to have a statute regulating a risk pool doesn't make sense when it comes to healthcare.
Turn your light on.
No, the investment restrictions, no, I don't believe there's, in terms of in terms of investment restrictions, I don't.
Fixed income or stocks.
Right, I mean, in terms of, it would be like anybody, they can, obviously, the board members will have a responsibility to be investing in appropriate vehicles.
Representative Miles?
Thank you, Mr. Chairman. Thank you for taking my question. I'm just trying to make sure I'm really clear because I'm concerned that I might have to write the committee report on this. So with the health insurance pools, what we sent on was the characteristics of the pool determined which regulating body, the SOS or
Correct.
the DOI,
Which-
correct?
Yes.
Okay,
yeah.
so with this, with property and casualty, who are or what is the regulating body?
Right now, it is the Secretary of State
And
under 5B.
the proposal is for.
That's so you can see the 5B language in there in the beginning of the bill. And that was what the Senate was originally working off of.
And so,
Then 420R would then be the health plans.
for property and casualty, other
Property and
than,
casualty would be the 5, whatever, yeah, 5B. RSA 5B.
Thank you. Representative Ammon, you're next.
I have a similar question to Representative Miles. I remember the discussion last time, it was between who was the ultimate authority, the Department
Right.
of Insurance or the Secretary of State. So am I understanding it right that we're kind of sharing authority depending on the subject matter?
Never was sharing.
So this bill is still the Secretary of State?
This one would be that in terms of Primex and the way they're set up, they could stay under the 5B section. Because that's what they want. I mean, there's no reason to upset the apple cart in terms of what is the best regulatory authority. They're perfectly happy with that. And mind you, if you remember last year, there was a certain insurance company or risk pool. I won't mention any names, but it has some letters of SC. They decided to. They came in here and argued that they were perfectly happy, in terms of 5B, and then lo and behold, all of a sudden, they also had financial problems, and they're reverse. They weren't sending money back. They were going back to all the schools and saying, you need to pay in because our reserves are too low. Which makes it sound like really not a very good idea when they had to fund that money out several years before. Like, who's in charge of the proper?
Representative Teresia.
So, thanks for my question. So if I recollect, when we had discussion earlier this year, so the bill that we have passed, we are still giving the choice based on their structure.
It's not a choice. It's not. It's a choice. It's
Based
how
on their
their-
structure.
How their structure is.
Yeah. So based on the structure, they can stay with Secretary of State or they can stay with the insurance department.
Primex could do that. Yes.
So that is still there.
Believe you me, the health HT would very much want to have this new statute passed.
So okay, that still holds good.
That's the problem. And the Senate said, no, thank you. No, you're stuck with the old law and therefore non-concurred with this bill. So we're hoping that this year they've come to their senses.
Okay. Thank you.
Any more questions? Thank you, Representative Hunt. I have one card for Daniel Rosser Scott from Health Trust. Okay. You got, okay, good. John got one? Yeah. Representative. Okay. Okay. Thank you. Pass them around, please. Okay, take off.
Thank you. Good afternoon, Representative Petuzak, Chairman Hunt, and honorable members of the House Commerce Committee. My name is Daniel Rossner, and I serve in a full-time capacity as the business administrator for SAU 48 based in Plymouth. SAU 48 is the most complex SAU in the state and has the oversight responsibility for 9 independent school districts. I have also volunteered my time as a board member for Health Trust since 2013. I've been the chairman of the board since 2023. Prior to that, I was vice chair of the board and chair of the Finance and Personnel Committee. I believe I have a thorough understanding of the business cycle, rating process, reserve needs, and strategic alignment that exists when public sector employers have access to healthy risk pools. I'd like to thank you very much for taking time out of your busy schedules for the work you are doing. Understanding the critical value risk pools provide to the public sector in New Hampshire is a daunting task, and I particularly appreciate your willingness to consider positive action to preserve these entities. Make no mistake, risk management is an extraordinarily complex endeavor. Whether it be property and liability risks that we may and do manage through a risk pool such as Primex, or the health benefits and necessary ancillary services provided by Health Trust, these are critical functions provided in a particularly efficient methodology. In the course of my professional responsibilities, I have sought solutions from non-risk pool entities. They invariably are significantly more expensive and would thus increase taxpayer expense. In addition, the ability for these risk pool entities to continue to provide the essential roles they do is absolutely at stake with these legislative conversations about the future structure, regulatory oversight, and their very existence. Before I turn the microphone over to our outstanding and extraordinary leadership, I ask you to consider two factors in your deliberations. First and foremost, when the New Hampshire Supreme Court addressed the issue of risk pool reserves, it clearly stated that the board must rely on, quote, actuarial sound methodologies, unquote. Health Trust's long-term adherence to this requirement is the reason Health Trust is alive today. Second, please bear witness and acknowledge that the lower reserve levels advocated for and supported by the current regulatory structure have resulted in the insolvency or instability of both the other two health benefit risk pools in New Hampshire within the last 12 months. One has disappeared, the NHIT, New Hampshire Interlocal Trust, and one has only displayed solvency at their prior year-end audit by issuing a post-coverage assessment that caused budgetary havoc for many of its members, and to my knowledge remains unpaid by others. Thank you for your time.
Thank you for the opportunity to speak. My name is Scott DeRoche. I'm the Executive Director of Health Trust. I have written comments in the packets with details, but since they are 5 pages along with some footnotes, I won't read word for word. Out of respect for the committee's time.
Yeah, we can.
But if there are any questions, I would absolutely be willing to support them. I did have some comments to go through, and I think they're responsive to some of the questions that were asked earlier. So first off, I applaud the committee for the exceptional work last year on this critical subject. A lot of ground was covered and landed with what I believe was a great result. Health Trust strongly supports HB 1491. A lot has transpired with risk pools since we last spoke, making this action more important than ever. As brief background, Health Trust is a non-assessable risk pool. So that's the risk pool that would go under this regulation to the insurance department. And so that's a defining characteristic similar to mutual insurance companies, whether you're assessable or non-assessable. It has to do with the risk that you obtain, the risk protection that you obtain. And so in a non-assessable risk pool such as Health Trust, we offer a fixed contribution cost for the period of coverage per single 2-person family medical plan that's covered, as an example. If claims exceed what was expected in the rating process, Health Trust pays for that excess from reserves and then rebuilds those reserves over subsequent years. In an assessable model, there could be an assessment levied upon the members. And so even though you paid your premium for, say, 12 months, if that wasn't sufficient, an extra bill goes to you. And so that's a real defining characteristic as to the level of risk you're taking on. Throughout the country, there are both assessable and non-assessable risk pools. Health Trust has always been a non-assessable risk pool that protects the groups, which are the cities, towns, school district, counties, and others that we serve from surprise and shock assessments. and that can wreak havoc on budgets as we've seen. This is important for municipal budgets as health insurance is now typically the second largest line item in a budget, just behind salaries. Health Trust has operated as such for 40 years. We are the longest running and largest risk pool in the state. Our model predates RSA 5B, which is the model that was affirmed by the legislature in 1987. As a non-assessable plan in accordance with our external actuaries, Health Trust has historically maintained a larger reserve than the other two risk pools within the state. However, a recent reinterpretation of RSA 5B by the regulator has changed that. The new model that is preferred is that there's only allowed to have 1 year of reserves, not the 5-year reserve period that we utilize to calculate appropriate reserves. Further, the regulator states that non-assessable risk pools are not allowed and have never been allowed to operate in the state. This despite no changes to RSA 5B and no law to that effect. Our model is and has been explicitly stated in our annual filings for well over a decade. The regulator attempted to change the law, SB 297, last year, but that did not advance. Regardless, they're attempting again, even though the law did not change, through an enforcement action against our organization in September. Critically, the Secretary of State's model has too low reserves. We rate every year to cover expected claims and contributions. Expenses. Reserves are what is used for the unexpected. And in this volatile healthcare market, those reserves are critical. The model that's preferred by the regulator and tried to be advanced in SB 297 would limit those reserves to 12 to 16% of contributions. The Association of Governmental Risk Pools, or AGRIP, which is the national organization, the leading industry source for risk pools, states that on average, health risk pools hold between 34 to 38% in reserves. For further context, a normal insurance target is 33% contribution leverage. The RBC that's been talked about and in the proposed statute of 600% roughly translates to about 29%. The upper end of our own actuarial range through our external actuaries, Milliman, is equivalent to 28%. So you can see each of these are around 30. The reserve level that is supported by the regulator of 12 to 16 is less than half of this national average. So what happened over recent months? NHIT and School Care followed this model through their operating agreements or risk pool practices agreements with the Secretary of State. These funds ultimately proved to be too little. NHIT depleted those funds, those reserve funds, and closed. The receiver that was assigned by the Secretary of State issued $2.5 million in surprise assessments to the member groups of NHIT. School Care similarly depleted contingency reserves, ending their year in a negative net position. However, they did renew coverage and issued $30 million in assessments to their member groups in an attempt to restore solvency. There are only 3 health risk pools in the state, ourself, NHIT, and School Care. The 2 following the Secretary of State's model depleted reserves as of June 30, 2025. We did not. Enclosed in your packet is a table comparing the reserves. We encourage you to review that table. Our model works. As required, we had to issue $57 million in return of surplus during COVID. And then 2 years later needed to rebuild approximately $60 million in reserves. That volatility would not have happened if we could have retained these funds. Nevertheless, our larger reserve of 20% covered all claims. We had a reasonable rebuild and are now on our 3rd straight year of a positive gain. We did not have to issue assessments. We did this while never declining to quote a New Hampshire public sector group that wanted coverage. We're here to serve everybody. Our model works. Risk pools are important, especially in this extremely volatile health insurance market. Throughout the country, risk pools provide stable rates and strong benefits. During this recent volatility in the state, over 85 of our public sector groups went out to bid. So they got quotes from other risk pools, from the commercial market, the main carriers direct. The vast majority stayed with Health Trust because our model works and the coverage is robust coverage at an affordable cost. The private insurance market is not a solution. We exist to serve the public sector. That's our sole focus. We are a nonprofit organization. We are governed by a board of individuals from throughout the state, teachers, firefighters, business administrators, HR departments. We have county representatives, school representatives. In the packet, there's an annual report that tells a little bit more about our membership. We strongly support HB 1491 as it allows non-assessable risk pools such as health trust to continue. It allows for strong oversight. It allows for prudent reserves using the RBC system, which is the solvency system used in all 50 states by insurance departments. To be clear, it is more stringent oversight. For example, it requires rate approval by the insurance department, which we don't have today. However, we welcome this oversight. We're here for any information you need. We were transparent through the process last year. We continue to be. There's information within your packet. Happy to answer any questions that you may have, either now or over the coming weeks.
Thank you. Questions? Representative Porcelli.
Thank you. First, I just want to clarify, are you suggesting that you want to stay under the current RSA 5B or that you like the new chapter 420-R?
New chapter 420-R. We
Is-
are a non-assessable risk pool, and so
fine,
that is
perfect.
where non-assessable risk pools would move to and be allowed to continue. We are under RSA 5B today. The current regulator of RSA 5B, the Secretary of State, has stated that non-assessable risk pools are not allowed to exist today and that we are not allowed to maintain the reserve level that we have maintained.
Follow up, please.
Follow up?
I'm not sure if you know this. So then the Primex would stay with the 5B? Probably.
From my knowledge,
We-
Primex is an assessable risk pool and
Right.
has been clearly
Okay.
from the start of their organization, from what I
All
understand.
right, that was just clarification. But
Mhm.
my real question is, so do you work with a commercial commercial insurance company to do any of your processing or networks, or how does that work?
Absolutely. So we are in what's called an ASO relationship, so administrative services only. So to be clear, Health Trust, the organization, holds the risk. Health Trust is the self-insured party. Anthem is who we partner with on the medical side. We have other partners, CVS Caremark for prescription drug, Delta Dental for dental coverage. But in the case of medical, which is the largest line of coverage, Anthem is our partner. So we pay them a fee to utilize their network of doctors and their claims processing, but the claims themselves are paid by Health Trust. And so once a week, we get an invoice from Anthem for $5-6 million. We pay that invoice to Anthem because we are the ones that are holding that risk. But yes, we do partner with them. It's my understanding School Care Partners with Cigna has for a long time. NHIT used to partner with Harvard Pilgrim, so the big carriers in the state all had a risk pool partner. In our case, Anthem can bid directly on business as well, so they're our competitor in certain cases. So if a school district wanted to understand what Anthem Direct would look like versus Health Trust Direct, they're certainly allowed to do that. In the vast majority of cases, they choose a risk pool because we're dedicated and have certain services and support that are focused on the public sector.
All right, can I push my luck
One
and
more
ask one
follow-up.
more? Okay, so the difference between, so you looked into, or schools, sir, you've looked into the private market, like Anthem directly, and can you just share what your experience, why you did not choose that?
There are a
direct-
couple of reasons, and I'll
Thank
try and make it brief because I value your time. First of all, anytime we've sought private sector insurance solutions to our risk management needs, the cost has typically been between 20 and 30% more expensive. The second piece is that Health Trust provides our organization with some additional services that are very beneficial, that save us the staffing. I'll give you one quick example. In New Hampshire, under RSA 100A, retirees are entitled to health insurance through their former employer, the employer they retired out of. And depending on their age and when they retired, et cetera, part of it may come from the New Hampshire retirement system, or part of it might come out of their pocket, might come out of their checkbook every month, whatever. Health Trust manages all of this for our retirees as well, so that we don't need to staff the school districts to handle this type of service. In addition, by providing this cost-effective structure for health insurance, for the life insurance benefits that may be purchased, for Delta dental insurance. It's just an extremely cost-efficient methodology for the public sector to acquire these services.
Okay, Representative Ammon.
Thank you, Mr. Chair. Thank you for coming to testify. I'm trying to frame this question. I seem to recall testimony on the previous iteration of this, that the Secretary of State had concerns that the reserves would build up too high, and that because it's taxpayer money, that money should go back to the taxpayer. So if you move to the insurance department model, you get to keep more. So I guess the difference is low reserves with assessments, higher reserves with no assessments. I think that's the two different models that simplified. But what protects the concern that the Secretary of State had about those reserves getting too high? What protects the taxpayers from not having money that they're entitled to, maybe? How does that work in your model?
It's an excellent question, and I'll try to be brief, but if you could bear with me, because I do believe this is the heart of the issue and has been for well over 15 years with a Supreme Court decision along the way back in 2014 related to this. So the current RSA 5B is a relatively short statute. It says that all money that is not used for reserves, expenses, et cetera, must be returned to the political subdivisions. It doesn't define what is appropriate reserves. We use Milliman, who's one of the world's largest and premier actuarial firms, to calculate a reserve level that we should hold. We use one that it goes through a stochastic modeling, but effectively there's a 95% chance of solvency over a 5-year period of time. That's the standard that's utilized. That's where our reserve level comes from. There has been pressure over time by the Secretary of State to lower and lower the reserves that are held, right? Leading to NHIT, as an example, signing a risk pool practices agreement in 2020, agreeing that they would hold 15% in reserves. We went to the lower end of our actuaries range, which equates to 20% of reserves, as an example, during the COVID years. And so when we had a wave of claims come through the market, we went from 20% down to about 5%, and then we're able to rebuild. We're currently just under 11% and rebuilding positively. And so those reserves were used to cover it. We didn't deny any claims. We didn't issue assessments. Everything was paid for. NHIT, as an example, went from 15% to 0, from what we understand. School care went from about 14% to about -2%, from what we understand from their audited financials that they posted today. And so you can see those waves of about 15% of claims are coming through the market. That's not unique to risk pools. That's in the commercial market as well, with high cost therapies, specialty medications. The health insurance market is an extremely challenging spot. And so when those waves of 15% came through, and that's 3 different carriers, 3 different actuaries, it's not a specific problem to any one insurer, any one risk pool. When those waves came through, if there weren't adequate reserves, you had to raise funds or deny claims. And that's what occurred with NHIT with the $2.5 million assessment and school care with the $30 million assessment. Both stated that they would not be able to pay claims without those assessments coming through. So going back to the testimony I was providing, the National Association says factually, the average, depending on the 2 ways to measure it, are 34% or 38%. If we were in that situation, there would be no concerns whatsoever, and then you could have a reasonable rebuild to ride through that volatility. And so what's occurring is, even though 5B hasn't changed, the interpretation of 5B by the regulator to have lower and lower and lower reserves, it may get you through 1 good year or 2 good years, but actuaries don't have a crystal ball. And if a wave of claims comes through, it's not enough to remain solvent without some other revenue source. And so we are very supportive of moving to the insurance department regulation that is listed there using the RBC methodology. The RBC methodology is used in all 50 states. It does have in it, in the statute before you, or the bill before you, sorry, has a requirement that at the 600% RBC level, which is right about 29% for us, that there would be a required vote of the board as to whether return surplus or not. So to answer your question, risk pools should not hold unlimited reserves. It shouldn't be allowed to grow forever. It should go to the political subdivisions that we're meant to serve. But the first thing is make sure the reserve is adequate, and then if you have a surplus, distribute it. Don't make the reserve inadequate and try to distribute it without having that funded, which is the model that is being pushed upon us today.
Just to follow up, and then briefly, if you could, I imagine you make yield on the reserves, right? That could be part of your model. Who decides again when the reserve is too high? You mentioned a board vote. Is that self-policing? Is it industry policing, or is it the insurance department that sets that? If you could briefly, please.
That's a great question.
Yeah.
So today we hire an external firm, Milliman, who's an actuarial firm, and they create a range and say on this end of the range, given these assumptions, you would have your 95% chance of solvency over a 5-year period. On this upper end, given different assumptions, you would have it. The board takes that information, deliberates, talks to the actuary. The board determines what the target capital level is for that reserve range. Anything above that is returned back to the public sector.
And do you share with the insurance department that Milliman assessment so they know what you're?
We share with our regulator, who's the Secretary of State today. We don't share with the insurance department because we're not regulated by them. But that being said, it is publicly available. It's posted right on our website. Every single year, we file our reports and post them on our website. That report's called the Capital Adequacy Report. There's also an incurred but not paid report, a premium deficiency reserve report. There's also rate letters. So everything's done in a very transparent manner. There's a public hearing with our members before rates are approved and about the return of surplus. So all of our over 350 member groups are able to weigh in as well. It's not just the board's decision, and the board hears that prior to making a determination. Under the statute that's before you, the board would be required to have that vote at the 600% RBC level, which again would equate to about 29% for us.
Go
I do
ahead.
one more. Wouldn't it be in the board's interest to keep reserves because you get yield on them? I mean, wouldn't that be in their interest to vote to keep reserves instead of giving it back to the taxpayer?
Well, absolutely, reserves play an important point. And so there is an investment return on reserves. So as an example, when we had that challenging year, we liquidated some of the investments and had a $9 million realized gain. And so that $9 million realized gain is less money that didn't need to be raised from the public sector, from the schools, from the towns, et cetera, that contribute. So there is an investment income. There is, I understand the question earlier, there is an investment policy. It's very prudent. We meet with investment advisors, make sure that it's a safe investment, et cetera, et cetera. The board is very interested in retaining adequate reserves. And our board is made up of member groups as well. So they're representatives, such as our chair, of school districts, as an example. They understand their budgetary concerns. They understand the tax concerns of their citizens, et cetera, et cetera. They're the ones that make the decision, not us as professional staff. And so they are able to weigh the needs of the risk pool and making sure that there's prudent reserves, along with the needs of the member groups and what's going on in the public market.
If I could just add one brief comment, I might be misinterpreting the question to a certain extent, but I want to be clear, it's known that the board members, all 11 of us, are volunteers, right? We don't receive any compensation. And when we talk about the income off the investments, which was part of your question, it's income that is used to assist with the payment of claims, and any income from those reserves, only purpose it serves is to reduce the amount that we have to build into rates to be paid by our tax members. There's no financial gain by the board.
Thank you. Seeing that there's no more questions, thank you very much. I have one card left. Margaret Burns from New Hampshire Municipal.
One more card, too.
Do you have another card?
I don't have a card.
Good afternoon. I'm Margaret Burns, Executive Director of the New Hampshire Municipal Association, here this afternoon in support of House Bill 1491. The major reason that we are here in support of House Bill 1491 is that the bill would allow two distinct models of risk pools to exist in New Hampshire, assessable and non-assessable, which has already been the point of conversation in this committee hearing this afternoon. This provides clarity to local governments who are the members of risk pools and lets them to decide which pool best suits their needs, or none at all if they choose to go out onto the commercial market or go in a self-insured path. This is also consistent with national standards. The Association of Governmental Risk Pools, AGRIP, recognizes that both assessable and non-assessable models are acceptable models with risk pools, and this would mean that New Hampshire law would mirror those accepted national standards. It's extremely important that this bill differentiates between assessable and non-assessable for member clarity and member choice. It was very clear to NHMA that in the wake of the interlocal trust assessments and the school care assessments, political subdivisions were not prepared and not aware that assessments, especially assessments of that size, were a possibility under the models that they were in. And so creating this clarity in the law so that political subdivisions can look and say, this is a model we like, this is not a model we like, or we reject both of these models and we wish to go a different route is extremely important. It essentially lets them to choose between perhaps a more stable premium cost year to year in a non-assessable model and perhaps a lower rate cost in an assessable model with perhaps more fluctuations between returns and assessments in the years to come. But that's for them to decide, and this bill would give them that choice. It's also important, I think, that House Bill 1491 represents a compromise. It includes both the language that the Senate preferred with regard to RSA Chapter 5B on the assessment of risk pools under the Secretary of State, as well as included language from this committee last year about regulation of non-assessable pools under the Department of Insurance. And in recognizing both of those models and in providing different regulators for both of those models, House Bill 1491 also beefs up the regulations such that a political subdivision can now look to statute to understand what the rules and regulations are for each pool, including making clear that if you are in an assessable model, here are the triggers that would lead to assessments being levied so that they cannot be surprised in the future as they were in the past year. I also want to note that page 10, new section RSA 420R3, actually allows for the creation of new pools. Right now, state law is not clear on how governmental entities or political subdivisions could create a new pool. But under this bill, political subdivisions that are unhappy with all the choices that they have could actually form a new pool. And we would certainly be supportive of them having that additional authority and that additional, essentially local option that this bill would create. And that may be particularly true considering that cities, towns, counties, and school districts have one fewer choice with healthcare pools than they did last year with the end of interlocal trust. And so in conclusion, I just wish to note that last year there were 3 healthcare pools. This year there are 2 healthcare pools. And so I urge the committee to act favorably on this legislation to ensure that there's clarity in the law and that political subdivisions can still continue to rely on risk pools if they wish to do so to provide healthcare coverage to their employees. Thank you so much for your time. I, of course, am happy to take questions, and I do wish to hand out a letter signed by several mayors in support of House Bill 1491.
Thank you. Representative Teresa.
I just have a quick question. Thanks for taking a question. So you mentioned that the risk pools can pick either the accessible model or non-accessible model or none. So what will be the third option?
The third option is to go into the commercial market to work directly with health insurance or to work with a broker. And another option would be to go the self-insured approach. So there are several cities that have gone the self-insured approach. I believe Concord, Manchester, Nashua, and Rochester all take that approach. And there may be others that I'm not aware of, and there may be counties and school districts that go that way as well.
Okay, thank you.
Very much for your testimony.
Can I hand out this
And
letter?
I now do.
Oh.
Light.
You very quickly went through it, so I'm looking for
Apologies.
it now. The point that you made that you could start up a new
Yes.
risk pool, where is that?
Thank you so much. It is on page 10, new section RSA 420R3 is what I wrote down in my notes. And so hopefully I am correct about that.
Yeah, that's not on page 10.
Not on page 10? Bear with me. Bear with me. Okay, so sort of in the middle of the page, line 15, page 10, advanced premium pooled risk management programs authorize permissible coverages. Line 17, to accomplish the purposes of this chapter, any two or more political subdivisions of the state may, et cetera, form an association under the laws of the state.
That's what you meant.
That's
Okay.
what I was referring to. Thank you for the clarification.
Thank you very
Thank you.
much. All right, last card, Brendan O'Donnell, the Deputy Secretary of State. Who is against the bill?
Mr. Vice Chairman, members of the committee, I do want to apologize. David Scanlon did want to be here today, but he is tied up with some election-related litigation. My name is Brendan O'Donnell. I'm the Deputy Secretary of State. You've heard from a number of speakers, including the sponsor, that the proposed legislation would create essentially two types of pooled risk management programs, one under the oversight of the Secretary of State, one under the oversight of the Department of Insurance. I'm not here to testify about the merits of the legislation or the merits of health trust business practices. I do want to talk timing. When Representative Hunt introduced this bill, he said it's the same bill that you looked at last year, but there is a big difference, and that is between 2025 and 2026. In that interim period, the Secretary of State initiated an enforcement action against Health Trust. You heard from Health Trust today that if this legislation passes, they would be subject to oversight under their model with the Department of Insurance. In other words, the proposed legislation would enable Health Trust to evade enforcement, to regulate or shop, and to play the legislature and various state 5B. Secretary of State has authority to investigate and enforce violations, and in 2011, they did that with regard to Health Trust and several related entities. A hearing officer ultimately found that all of those respondents, including Health Trust, violated multiple provisions of RSA 5B. And in a unanimous opinion from the New Hampshire Supreme Court, authored by Judge Lynn, you know him as Representative Lynn, he upheld the hearing officer's findings with respect to Health Trust and those other respondents violating RSA 5B. That included violations related to level of reserves, purchase of reinsurance, transferring funds for the benefit of other respondents, and using surplus for rate stabilization instead of returning the surplus to member municipalities. Fast forward to September of 2025, the Bureau of Securities Regulation initiated a new enforcement action. And the claims, and I'll repeat that these are claims, they're just allegations at this point, are that Health Trust has violated RSA 5B in several ways, including operating as fully insured, guaranteed cost insurer, despite RSA 5B only authorizing self-insured risk pooling by political subdivisions, improperly using surplus funds, improperly spending member funds, including on a multi-employer pension plan, failing to provide reasonable actuarial evaluations that accurately assess necessary contributions and reserves, and impeding, impairing, and usurping governance by failing to provide the board with accurate, unbiased, and complete information, including by denying one board member's request for information about legislative activities. Again, there is an independent hearing officer appointed. That hearing is scheduled for October of this year, and any decision can be appealed to the New Hampshire Supreme Court. These are just allegations, and they will be decided by a hearing officer in the Supreme Court. And because this is an ongoing enforcement action, I can't comment on the merits or the background of those claims. But I think it's very important for the committee to be aware about this, not to litigate the merits of those allegations, but to understand that passing this legislation would give Health Trust a get-out-of-jail-free card from the requirements of RSA 5B, a statute they were found to have violated in the past, a statute they are alleged to currently be violating. Your committee, this legislature, should not allow itself to be drawn into the middle of a pending enforcement action, should not allow Health Trust to use the legislator to shop for a more favorable regulator. Once this enforcement action is concluded, I think it's entirely appropriate for the legislature to revisit this, to take this up, to find out whether or not there should be a change in the regulatory scheme, but not now while there is a pending enforcement action. So again, because of that enforcement action, I can't take questions at this time, but I have brought copies of that 2014 Supreme Court decision, the Secretary of State's order initiating an enforcement proceeding, and the Bureau of Security Regulations petition in that case. And I want to add that if anyone wants more information both about the Secretary of State's claims through the Bureau of Securities Regulations or about Health Trust's response to those claims, because they are just claims at this point, all of the pleadings in that matter are publicly available on the Secretary of State's website. Right on the homepage, there's a link to all of them. So I have a copy of those 3 documents that I mentioned for the committee, and I have extra copies as well if any committee members want them.
Representative Spear.
This is not about any details about the litigation. If I'm hearing this whole thing correctly, what I hear is that under the Secretary of State's, under 5B, forgetting about the Secretary of State, two risk pools have failed for exactly what's in this thing. And now you're blaming Health Trust for trying to stay in business and do right by their customers. Is that what I'm seeing? That in fact, they're trying to survive and create something that doesn't fail like the 2 that have already failed. And we're down to 1 now, I think, or maybe 1.5. Is that the environment we're talking about?
With respect, Representative, that sounds like it does relate to the subject of that enforcement action. And
Okay.
I think that will be resolved by the hearing officer and ultimately by the Supreme Court if there's disagreement. Thank you all.
One more question, the final question.
I think this does not relate to the case. I'm trying to understand the Secretary of State's position that reserves should be capped. And here's how I'm thinking about it. Maybe you can tell me if I'm off base or on target. Following local politics for as long as I have in my town, I've noticed that, and I want to be clear, not my current select board. I love my current select board. They're all great. But in the past, there's a reluctancy to return money to the taxpayer because there's a political aspect to it. And that is if the tax rates go up and down. When the tax rates go up, everybody freaks out and they're mad at the select board or the school board, whoever. So there's a tendency to keep those reserves in their pocket so they can smooth out the transitions. But to me, it's taxpayer money. It should come back to the taxpayer, the majority of it. And because they're keeping things in reserves, it sort of makes it easier to keep raising taxes because they're insulating themselves from the political pressure. And if you collectivize that up to one of these organizations, I'm thinking maybe that's what the Secretary of State had in mind or something close to it, to have that objection to having the reserves get too high and capping it so the money goes back to the towns. Am I even closer in the ballpark?
I think that's close. I don't know the specifics, and I defer to Secretary Scanlon. But I think what you'll see, and in particular with the 2014 Supreme Court decision, there's a section where Judge Lind talks about reserves and that the statute doesn't provide discretion a certain amount. There is discretion in terms of setting reserves and other things, but the result of that statute is you have to be returning surplus beyond that amount that you are allowed to keep to political subdivisions.
Just follow up. Sorry to cut you off. I'm not speaking about the statute because we're we're making law here, so we can change it. And I understand in that particular moment in time, they're violating the statute, or allegedly. I'm just wondering where the concern from the Secretary of State came from to have that position in the first place. And maybe if you don't know, you could,
I don't
what's the
think-
history of the thinking behind that cap? I'm curious as to, the justification for it.
I don't think I can competently speak to that question, but I expect that Secretary Scanlon would be available afterwards.
No question.
I have one after him, quick one.
So you already mentioned that there's some pending enforcement action going on right now, and suggested no legislation should be passed during this time. Do you have any time frame when this enforcement action will be complete?
Yeah, so currently there's scheduled to be a hearing in October, I believe, of 2026, so of this year. And it's supposed to take 3 to 5 days. I can't guess how much time it would take the hearing.
So sometime in 2026, it should be complete,
Well,
you're saying?
if there is an appeal, I would expect, just in my experience with the Supreme Court, that you would add about another year to that time.
Thank you.
It's
Madam
a
Clerk,
similar, it was similar to that. I just want to understand the process. So if this bill were to pass and the effective date is in the bill, are you saying that the lawsuit cannot go forward?
I think that would be a really good question for the attorneys in the Bureau of Securities Regulation and the attorneys for
Okay.
Health Trust.
All right,
And
thank
they
you.
might dispute that, but based on the testimony I heard today, Health Trust believes that if it passes, they would move to oversight by the Department of Insurance, not oversight by the Secretary of State, which would sort of invalidate the enforcement action. So arguably, so I don't know the true outcome, but that's the risk.
Mr. Assistant Secretary.
Thank you very much.
Final card. Bruce, come on down.
Thank you, excuse me. Thank you, Mr. Chairman. For your record, Bruce Berkey, Symphony Capital Group, representing Health Trust. And I'm happy to briefly touch on the issue, but I would welcome Mr. DeRoche to come back up and just address the allegation that we were regulator shopping via this bill. And I don't think that that's the case at all, because we were supporting the nature of this bill, the same bill that this committee passed in the spring of '25, and we are supportive of it, and we were supportive of it before the enforcement action of the Secretary of State's office. Scott, anything to add?
Okay, are there any questions? Oh, you want to come on up? Come on up. He's got a card ready. Okay,
Just want to briefly reiterate that our support is for the system itself. We did have support for that last spring, as you know, working through these subcommittees and in the Senate. The enforcement action came through in September, well after that entire period. What we advocated for last legislative session, what we're advocating for this legislative session, and the heart of that enforcement action is about whether we are allowed to retain adequate reserves in order to remain financially solvent and help the member groups that we serve. A notable part that was omitted about the Supreme Court ruling that was just referenced in 2014 is the Supreme Court struck down the provision that we were only allowed to hold 15% in reserves. That 15%, again, a familiar number, school care, NHIT, the risk pool practices agreements with the Secretary of State. That was struck down by the Supreme Court. The Supreme Court said, under current law, you should rely upon a qualified actuary. That's what we do. We've retained a Milliman. We file our reports annually. They're publicly available. We're not retaining excess funds. And the fact that we're in an environment where 2 risk pools have depleted their reserves, one has closed, one has issued the largest assessment in New Hampshire's history to the public sector. Both are, one has left the market, one is trying to restore its solvency. They both followed the practices of the Secretary of State through the risk pool practice agreement. And now we're discussing whether Health Trust holds too much in reserves. That's what allowed us to pay all claims and not issue assessments to the political subdivisions.
Thank you.
Thank you very much. With that, we're adjourned.